Good evening, one and all. It is very hearty welcome to one and all for the refresher course on the annual report. Friends, there is an announcement that our Vice President Aniket sir and also our CCM Cypriya ma'am are in meeting with the MCA authorities regarding the very important issue of the institute, and they could not able to join now immediately. So we are right away going to the technical session, and then as and when they are available, we will go ahead with the regular formalities of introducing the vice chairman and giving his message. And after that, if possible, Sri Priya ma'am also might be joining. Otherwise, she has promised to join in the tomorrow also. Thank you very much. And as the secretary's the power connection has been derailed, I'm taking care of the things. So friends, before starting of the meeting, I request to play the institute motto song. You do not rise on your place, and you keep your right hand on the heart.
Teshu jagrati Yaesha sukteshu jagrati Kamam 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 sho Nirvimanaha nirvimanaha Tadeva shukram Tada Brahma Tadevamritamucchate Tasmin lokaha shitaha Sarve tadunatyavi kaschan Etadvaita
Welcome once again to the refresher course on the annual report. Now I request our chairperson, Gaddam Shita Shireen ma'am, to give away opening remarks and welcome address.
Chief Guest of the Day, Honorable Vice President ICA, C. Aniket Sunil Kalati in absentia, and Central Council Member, C. Sri Priya ma'am in absentia, and speakers of the today's technical session, C. Joman K. Judge and C. Subramanya Sharma, and colleagues in the management committee, and past chairman of the branch and coordinator of the entire program, C. Godavarti Srinivas Rao, and my dear fellow members, very good evening to one and all. It's given me an immense pleasure to welcome you all for the 5 days virtual refresher course on 360 degrees of annual report, organized by Corporate Laws and Corporate Governance Committee of ICA. Vijayawada branch takes great pride for having the opportunity to host this 5 days virtual refresher course. As you all know, this is a 5 days refresher course covering all issues in relating to submission of annual report, which covers the topic director's report, CARO report, statutory audit report, and deferred tax liability and MAT computations, practical issues in Schedule 3, and insights about accounting standards applicable to small and medium companies. Members, Companies Act is always subject to various replacements and introduction of new provisions, and also failure to comply with sections and rules may lead to stringent penalties. As a professional one, we are supposed to update our knowledge and guide our clients to avoid such penalties. And also, I am glad to mention here that entire 5 days course is planned by eminent speakers which are having vast experience in their respective subjects in which they are addressing for. So I request you all to please utilize this great opportunity and enrich your knowledge by having great participation. Thank you, Pananda.
Sir, unmute. GSR, sir, unmute.
Unmute and speak, sir. Yeah, I'm unmuted now. Joman here. Good evening to all.
Joman sir, welcome sir. Thank you for gracing the occasion, and once again to the Vijayawada branch. Really great honor, sir. So now, after hearing our Yeah, yeah.
Yeah, CA Narendra Babu will say a few words about our German judge, sir.
1 second. Before that, I would like to say something about the this refresher.
Yes. Why this program?
Why this program?
Yeah,
Yeah,
that's good.
Sir, as you all know that, my dear members, welcome to the refresher course on the annual report. Friends, welcome, sir, Joman Judge, sir. And this virtual refresher course has aims at the guidelines guiding the members of the practice and also in the members in the profession, in the service, especially for the young chartered accountants who are into the audit of the companies and also assisting the companies in the preparation. This virtual CPE meet guide them in a minimum care to be taken by the auditors as an advisor for the company law matters, including the preparation of notice and the director's report. Of course, it is not our duty to prepare the director's report and notice to the shareholders or the directors, but we are in the stage of advising them in the process. So there are a lot more changes in the auditor's report and Caro report in 2020 also. And we have to give a lot of disclosures on the accounting standards applicable for the small and medium companies. So many accounting standards are applicable to this, because if you see in the MUFSHIL areas, wherein this the corporate cult is very, very less, but every chartered accountant do have some accounts as the companies, but for maintaining this annual report, the preparation of the annual report, it has becoming a hectic task, because as you know that after mushrooming of the companies in the corporate cult, most of the companies have namesake companies wherein almost wife and husband are most of the family members are the directors, and they run the show. The sole intention of the floating of these companies is limited liability. That is the only thing that is attracting them to the company style of functioning. And of course, the transparency part of is also there. There are so many stakeholders apart from the shareholders who are interested in the information of the annual report. The annual report consists of so much information regarding the company and the prosperity of the company and the well-being of the company. And all these information should be universally standardized. So many of the chartered accountants, more particularly in the suburban areas, are not well acquainted with the latest changes, that there are very much little practice for the members. So there are constant changes in these reports which needs updation. So we have planned this 5-day refresher course. In the beginning of this today itself, there's notice to the meeting of the directors and also shareholders by Joman K. Judge sir, and the auditor report also, and Caro by Subramaniam Sharma sir. And tomorrow, next day, being understanding about the deferred tax liability and cash flow statement and also MAT computation. Day after tomorrow, it is Chinnaswamy Ganeshan turn to tell you about the intricacies of the Schedule 2 and Schedule 3. Day after tomorrow, and after that date, that is totally related to the accounting standards. So I request everyone to enrich their knowledge in these areas. Thank you one and all. And over to Ravi Kishore sir for the next commencement of this.
Yes, sir. You should keep your dog quiet, sir.
Sir, before that, whoever is having that dog barking in the background may mute.
No, sir.
He's cheering us, but let him listen and then bark.
And also,
the problem is it started in between these things, sir. I could not able to control the things.
No, sir. He has brought that dog for safety purpose towards the past members. He is the auditor is a watchdog, sir. Yeah, not a bloodhound. Yeah, symbolically, and we have seen that. Right. Yeah, or to Narendra Babu to say a few words about Jaman, sir.
Yeah, thank you, sir. I feel happy to say Jaman sir about the few words about the Jaman sir. Is the most passionate person I saw in the year of 2019-20 when I was joined in the committee. When I came to the Kochi sir, Ernakulam, I tried to learn your vocabulary skills.
Hospitality, the way he speaks yes, and sir, the way he receives the people. Sir, we remember your hospitality after 4 years.
Thank you, sir.
We still remember.
Your words are also, sir. It is beautiful in your voice, the beauty of your voice, and mesmerizing the people through your voice. It's awesome, sir. And I also happy to introduce to our Vijayawada fraternity members. Yes, Jaman sir is the fellow member of the CI. He is having 30 years divestment practice in the.
Sir, Narendra Garu, Vice President sir has joined. Ramesh, please make Vice President sir as co-host.
Then I think we'll wait to hear from him.
Sir, Jaman sir, we will hear from Vice President sir, and then we'll move on. And also, if you can say a few words about our Vice President sir. Jaman
No,
sir.
no need.
VP sir, good evening. Jomania.
Yes,
sir, good evening.
Jomanji, how are you?
I'm good, sir.
Very good evening to you. I heard about your comment on the watchdog.
Thank you, sir.
Thank you, sir.
You're doing great service. President being a little indisposed, having a very busy schedule. Thank you for joining us, Vijayawada. We would surely love to have you physically here. If you have Prasanna, all of them there from Andhra, and all of them, they are Uppala, all of them. So 3 CCMs from the region, from the state, 2 states, twin states, which was 1 earlier. So, sir, since you are traveling, we would like to hear from you before I start my session. If it's okay with you, you can please deliver an address.
Thank you so much, Jomanji, and to the managing committee members of the branch, regional council members, a very good evening to you, and apologies for joining from the car, but today has been a very busy and unscheduled day. As you would be aware, we had a long meeting with the Honorable Finance Minister and our Corporate Affairs Minister, who gave us a very patient hearing for over 1 hour today. So we were there, and then I'm just coming out of the Ministry of Corporate Affairs, where we had another meeting with regards to the MCA LLP forms. So first of all, let me thank you as the branch for inviting me for this very important national seminar that you're conducting under the aegis of the Committee for Corporate Law and Corporate Governance. I congratulate you, the entire chairman, the managing committee, office bearers of the branch, the SIRC, and more importantly, our council colleague, Sri Priya ji, who is the chairperson of this committee, Sri Preeti Savala ji, who is the vice chairperson of this committee, my colleagues in the Central Council from the Southern region, Rajendra Kumar ji, Prasanna Kumar ji, Dayaneva Sharma ji, Mopala Sridhar ji, and Kotha Srinivas ji, who are all, I am sure, very actively participating in all the events of the branch and also of the Southern region. Friends, as you are aware, today we had a very important meeting with the Honorable Prime Minister, with the Finance Minister, on the issues concerning the profession, and of course, with regards to the roles and responsibilities of chartered accountants when we are performing an attest function. When we are having this very important discussion, not just in the council, not just the regional level, but at all branches, about the treatment that must be meted out to chartered accountants, especially in relation to professional work that is being conducted by our members. Let me share with you that, yes, we had a very productive meeting with the Honorable FM. She has heard us. In fact, in the specific case that was going on in Gurgaon, certain officers have been suspended, and we've agreed on certain medium and long-term way forward of how the profession can work along with the ministry to ensure that A, our professionals are treated as such, B, with regards to certain practices that are happening in various government offices, how ICI and the ministry can collaborate either with CBIC or with CBDT to ensure that we have the new India that we are all looking for, with no corruption, and of course, where ease of doing business is truly felt by everybody. And in this regard, like I said, we had a very conducive meeting, which lasted for more than 1 hour. We had the chairman of the Indirect Tax Committee, Rajendra Kumar ji, along with his vice chairperson, and chairperson of the PDC, Commissioner Soni, along with vice chairperson Prasanna Kumar ji, who accompanied me to the meeting of the Honorable Finance Minister. But friends, these incidents, the discussions that I'm referring to, and more importantly, all the happenstances that are happening around us, have very clearly proved one point. And Jomanji, you and everybody else will agree that the role of auditors and chartered accountants now is under the highest level of scrutiny, and the public expectation from us as chartered accountants for any attest function is far, far higher than it was ever in the history. A lot of it is to do, of course, to technology, because now everything that we file and submit is not only analyzed by somebody sitting on a desk, but computer systems, artificial intelligence, which compares data, utilizes that for the purpose of various reports that are submitted to the government, and therefore makes it more possible for them to subjectively analyze the quality of work that is being performed. So my foremost request to all my colleagues would be, let us try and understand that the times have changed, and the expectation of government, of stakeholders, is that when we are reporting, we are signing maybe a certificate. It may be the corporate governance certificate. It may be submitting the audit report in SS 700, which you are going to discuss today in this very important seminar on 360 degrees of an annual report. Or it may be any other certification that we are doing. We now have to be extremely careful that you are very clear of the standards and the framework under which you are issuing a certificate. Gone are the days when you could simply take your letterhead and say to whomsoever it may concern and issue a certificate based on the needs and wants of the client or maybe some regulator. We should now very clearly understand our reporting obligations qua the standards which exist. Our reports can be on an auditing issue through standards on auditing. If it is a limited review or other reviews, through review standards. If it is an assurance engagement, through assurance engagements, SAE standards, and their related services. Then we must look at the SRS which are in vogue. And for certification work that our members are doing, please follow the guidance note on certification and report for special purposes issued by the Institute. These are all very, very important documents, which I would urge all members participating here. Use the correct form of reporting, the correct framework of reporting for any assurance function that you are doing. I'm sure you will discuss them in detail today, but the annual report, which is going to be the discussion in this important sessions that you will have, please appreciate that now with technology, what is reported in the director's report and what is reported in your financial statements, what is reported in the secretarial report, and what may go in the business responsibility and sustainability report, they will all be analyzed using the computer. And therefore, it is even more important that we understand that all these reports have to be interlinked and understand the reporting requirements of each of them separately. Also ensure that they reconcile at a broader level with each other. And for this purpose, we all have to ensure that, yes, the reporting frameworks are understood. There is more diligence in terms of our application of not just using previous year formats, carrying forward files from the previous year and preparing the director's report and annual report, but looking at every number in a new and renewed manner each time you are signing a set of financials. Friends, let me share with you that today we also had a very important meeting at MCA with regards to the version 3 on the LLP. And there also I would request and urge all of you, please register yourself as business users on this portal. If you already have a business user login, please ensure that you are migrating so that you can see all your past history correctly in the portal. And wherever you feel that there are any issues that you are encountering in filing of any of the forms, the run form, the Philip form, the form 8, form 11, or any of the statutory forms for LLP, there is a Google form which has been created by the committee under whose aegis this program is being conducted. Use that Google form, bring it to the attention of the CGCLC. They will definitely be taking it up with the ministry, with the technology partner of the ministry to ensure that we are able to solve the issues of our members. But like I said at the beginning, and I conclude at the end, the era is of technology. We will have to adopt it in the right sense. So if you are using an operating system, let it be the most advanced operating system, Windows 11, 90% of your issues will get solved. Try and also be very well acquainted and equipped with the e-filing mechanism, because we started with the Income Tax Department, GST, MCA 21 version 1, 2, and 3. And going forward, everything that we do is going to be digital. Our vaccine certificates are today digitally delivered to us through SMS and on various applications of the government. The country has truly moved digital. The passports are now getting digitalized. The licenses and everything else has already moved digital. And the time is not far that annual reports will only be available in digital format, and even those specimen copies which some are printing will no longer be available, and everything will be digital. So very important when you are discussing the 360 degrees of the annual report, the various reporting frameworks, you also understand the importance of technology, and all of us as professionals adopt it in the right earnest and make sure that, yes, we keep the flag of the profession flying even higher and do our professional assignments with utmost diligence, underlining the three very important words on which the entire institute rests, that is excellence, integrity, and independence. I wish all the participants all the very best in this conference, and once again thank the committee and the branch for inviting me. Thank you very much.
Thank you, sir. Chairperson, madam, please unmute and say a word of thanks to Vice President, sir, who has joined in his busy schedule.
Thank you, Ankit Talati, sir, Vice President of ICA, for spending your valuable time in spite of your busy schedule. Thank you so much for your valuable message. Definitely, we will try to maximum extent what you have said to follow. Thank you. Thank you so much.
Thank you very much, and all the best to all of you. Thank you.
Thank you, sir. Over to Narendra Garu, please continue.
Friends, a small announcement. Sri Priya ma'am is another committee, so she could not able to attend for the today's meeting. Definitely, she is going to attend tomorrow's inaugural session. So that is the information from the committee.
Right. And another speaker of today's session today, G. Subramanian Sharma sir also has joined. He is on standby. Sir, Jaman George will take the first session, and we request you to please hold on to take the second session, sir. We welcome you to Vijayawada branch virtually, sir.
Good evening, Sharma sir.
Good evening. Right. Over to Narendra Garu. Please continue.
Yes, thank you, sir. And I'm happy to introduce Jaman sir. He is having experience of 30 years in the practice of ICI as a member. And he is also served as the chairman of SARC in the year of 2019-20. He is also mentor on Philip Macmillan Woods, a multidisciplinary accounting and consulting firm based in Dubai. And he is also a faculty for auditing at the ICI, has taught more than 10,000 CA students. Very great, sir. And regular resource person on professional circuit on accounting and auditing standards on corporate audit. Has done more than 900 presentations, and he is also peer review trainer of the ICA. He was a member of Auditing and Assurance Standards Boards of ICA, and he was the chairman of ICA Ernakulam in the year of 2002 and 3. And he has traveled extensively in the UK, Middle East, and the Far East, and past president of the Rotary Cochin Central and member of various social clubs. Is also Honorable Secretary of Kerala Management Association. He was also member of Advisory Board of St. Theresa's College, Ernakulam. He was also authored a book, Trials, Reflections of Personal and Professional Life, released in the February 2021. With this brief introduction, now I welcome to the Jaman sir to Vijayawada branch to mesmerize our people in the way of your voice and your presentation, sir.
Can I start? Am I audible, clear?
Yes, clear, sir.
Yes, sir. Before that, I request all the members to kindly place your name and membership number on the chat box to mark the attendance. Thank you, and over to you, sir. Thank you.
Thank you so much. Good evening to all of you. The dynamic chairperson of the Vijayawada branch, G. Srita Sririn, the vice chairman of the branch, Narendra Babu, who did the introduction so well, and also happy that you recalled the orientation program we had in May 19, me as the chairman of the region. I do have very pleasant memories of those 2 days of being together, great learning, great fellowship, great entertainment and all that we had here. The Secretary, Ravi Kishore sir, the CP in charge, the dynamic GSR, past chairman, immediate past chairman, right? Immediate past chairman, and other managing committee members, respected senior members, illustrious past chairman of the Vijayawada branch who have spared substantial amount of their personal professional time in the service of the branch, bringing up to today's glory and stature. I think Vice President has left. The Honorable Vice President, it is still online, even otherwise, who has sent a very, very strong message of, on the one side, reassuring that the institute is taking the required action in getting the two aggressive officers punished rather, and then also with a warning that we should be more upright, straightforward in discharging our duties as chartered accountants, because never than ever before, we are the profession, the individual members are under surveillance. And very unfortunately, some of them, very few of them probably, there are black sheeps in every profession, are resorting to some unfair practices, which is casting a shadow on the fine reputation of the profession, making a stain on the fine fabric of the profession, so to say. Therefore, that is a very strong message, and it was so kind of him to join us. So Vijayawada branch should feel enlightened and honored that he could join. Happy that Sripriya is joining tomorrow. She is the chairperson of CLCGC of ICA, Corporate Laws and Corporate Governance Committee, my former colleague in Regional Council. And this program, 360-degree annual report, which is bringing chartered accountants back to corporate law practice, if I may say. But before that, I think the chairperson can be more happy and smiling because we have 265 registered, 265 active participants already. So I wanted to say that thank you, and credit is all yours. You put in so much efforts, because I got the update that, other than ARS members itself, we had 200 plus registrations, and 5 days of core learning in the evenings on variety of topics. And Subramanian Sharma sir today, the co-speaker, very senior member, honored to be with him on the panel of speakers, who is enlightening on Caro is the next session, right? Caro 2020. So I think there's a need to reinvent corporate law practice. Somebody was referring to Vijayawada as a official place. I would grossly disagree. Vijayawada has become a great center of learning. You have so many corporate entities. And Andhra Pradesh is today ranked #1 in ease of doing business. And I just had a look at the glance at the number of companies which are getting registered in Andhra. It has at some point of time overtaken even Maharashtra in terms of numbers. So that has become a happening city, and you're close to the upcoming proposed headquarters, I understand. Therefore, the profession should be upbeat and also ready on the good prospects that the state's initiatives are bringing. And a lot of industries would come to India. Andhra is the most preferred destination. And, with the little disclaimer on China after the COVID and all that, we can see that growth. Therefore, I'm very happy that Vijayawada branch has been given the honor, I would say nothing less, to host this 5-day refresher course on company law, mostly on the annual report, financial reporting, and allied subjects. That could be accounting standards, new Schedule 3. And we are in a season of change. This year, we have 2 major changes. This morning, I spoke to my partners and my students, addressed them for 10 minutes, saying that this cannot be a copy-paste here. This cannot be a copy-paste because you cannot copy the auditor's report, that is Caro 2016. But this year it is Caro 2020. You cannot copy last year's financial statements, except for the previous 3 years you may need. Other than that, it's a completely new format in Schedule 3. And I have already addressed more than 4 branches and 3 more lined up residential programs on this topic. So we'll wait to hear from Subramanian Sharma sir on the Caro. And therefore, that's very important that we catch up, and we cannot have a passive corporate law practice, which is dangerous. So firms with multiple partners, more than 3-4 partners, I think it's high time that one partner should focus more on corporate law. And if we can have the IP practice also, insolvency practice also, one of the partners can really specialize. One more reason why I'm saying this is that our customary practice, some of the areas like GST audit, tax audit limits are being increased. This is being increasingly said, but firms are not gearing up to the reality that some specialization would really help. And so excellent that this program is at that point of alignment. Oh, nice to see Mr. Binod Periwal, who is joining from Darjeeling, Calcutta. I am from the East. That's nice. Welcome to South. And today we do not talk about South and East separately. This national programs to have participation. So that has lived up to the fact that we are doing a real national program. So with this introduction, and once again thanking the organizers for having me this evening to be the opening batsman. We are in the IPL season. So opening batsman for the 5-day program. Let me move on to try to share my presentation on the topic which is given to me. Is the screen visible for everyone? Narendra?
Yes, sir. Yes, yes.
So notice and director's report under the Companies Act 2030. See, what's happening is in the case of small and medium companies, majority of our clients, except very few listed companies, large publicly limited companies, many of the companies, in fact, rely on us, depend on preparing the notice and director's report. Because they would like to have, one is the cost, two is the ease of doing business in the right sense of it. So they would like to have everything under the one roof in the strict in the strict sense of it. As the auditors, we cannot be rendering the service on a chargeable basis, but we can really help them in doing that. But end of the day, whatever said and done, and we end up helping these clients, and they would expect from us to have this kind of knowledge and make sure that the notice and director's report is drafted and prepared along after the audit is done or alongside the audit. And that is some kind of a secretarial work. Here, I would like to say that majority of the firms today focus purely on tax practice. We have unfortunately pledged our tax practice, corporate law practice to companies without any reason. Many of us have the knowledge, many of us are structured to do that, but even with that, we have moved away. Therefore, it's very important that we get back to corporate law practice and focus on this. So that is a backdrop in which we are discussing this. So I'll move on with my presentation. The notice, I'll start with the notice. The important provisions are contained in section 101, that is the meeting, the notice of the meeting for the annual general meeting, as well as the EGM, general meeting notices. Section 102 talks about the explanatory statement to be annexed to the notice. The allied rules are Rule 18 and 19 of the Companies Management and Administration Rules 2014. As every one of you know, Companies Act is a delegated legislation. So there are so many things which are there in the Act which would say, as may be prescribed. And these prescriptions are then found in the rules. So we should always read the Act with reference to the applicable rules, whether it is accounts, whether it is audit, all that we should do that with reference to the rules. And the MGT 11 is a proxy form. Along with the notice, the proxy form has to be given to the shareholders to enable if they're appointing a proxy. So these are the important provisions. And recently, I hope you have seen this. This is just this month this has come. Companies whose AGMs fall due in 2022 can conduct their AGM on or before 31st December 2022 through video conferencing or OAVM, other audiovisual modes, in accordance with paragraphs of 3 and 4 of the circular 20/2020 dated 5/5/2020. So this is as in income tax, there is an extension. So earlier, the matter relating to accounts, there was some restriction. But today, AGMs up to 31st 2022, falling in 2022 financial year, calendar year, can be conducted through video. This is the latest circular which one should take note of in case if there is a. Now, most of the meetings are happening, but large AGMs and all that, people are still reluctant to assemble in large numbers. So this is still an enabling clause to do it on an online mode. We go to the specifics of this section 101. The normal notice time given in the Act, the length of the notice given in the Act is 21 days. In the case of Section 8 companies, it is 14 days. Section 8 companies are non-profit companies. We earlier had Section 25 companies under the erstwhile 1956 Act. But this is not mandatory. A shorter notice is possible if consent of 95% of the members entitled to vote are obtained in the case of an AGM. So for whatever reason, a private limited company where there are only family members, or a closely held public limited company where there are about 10-15 members, for some reason they have left out, or maybe they need to have a meeting at a shorter notice, This is the enabling provision which says that it can be done with 95% of the members entitled to vote in the consent. In the case of any other meeting, primarily EGMs, consent of majority number of members entitled to vote, that is in numbers, majority of the numbers, and which should not be representing not less than 95% of the paid-up capital. With their consent, it can be done at a shorter notice. Shorter notice means it could be even 1 day. There's no restriction. Please take note of that. So in drafting, while drafting the notice, between the board which approves the notice or the date of sending and the date of the meeting, there should be 21 clear days. That's the term which they have used. And companies not having share capital, 95% of the total voting power of the members, if they consent, it can be done at shorter notice. What are the contents primarily? The contents are, it should say the serial number. What's the serial number of a meeting? We normally in notice, we see that notice is hereby given that the 15th annual general meeting of the company, so that's the serial number, will be held at 10 a.m. on say 25th of May, Wednesday, 25th May, 2022, Wednesday, at so-and-so place, at the registered office of the company. This is how we draft the notice, and I would suggest if someone is going to do it for the first time, you can of course get in touch with me. We can share some formats which are there, notice and director's report. You don't have to reinvent. Otherwise, if you have a young team of people who can Google up and get some of the good annual reports, where we can see the format of the notice, you just go to probably download it. If it's a PDF, it can be converted and customize it. So that is the way we should start with if we are starting to help the client in preparing the notice of the AGM. And proxy, we had mentioned earlier, proxy is a non-e-form, MGT11. A proxy form has to be attached to the notice calling the or convening the annual general meeting. Attendance slip to be attached. Attendance slip. Normally, you would have seen, some of you would have seen earlier, it was on a perforated sheet. Half would be a proxy form, half would be an attendance slip, which should be attached to the form in order to record your attendance at the entrance of the AGM venue. And resolutions required, particularly in the case of special business, it is mandatory that resolutions required to be passed have to be given in detail in the notice. So I have with me one of the listed companies, where the auditors will be doing internal audit. I mean, I don't know if it's visible enough. There's a notice and where all these things are mentioned here. Notice is hereby given that 28th annual general meeting of the members of this company will be held on Tuesday, 10th August 2021 at 3 p.m. through video conferencing via VM to transact the following businesses. What are the businesses which are to be transacted? We'll see as we go by. In the case of an annual general meeting, the businesses have to be divided into two parts. One is ordinary business, which is routine. All non-routine businesses should be called special businesses. Even in this case, you can see that ordinary business and special business. I don't think it's readable, visible. So this is how it is classified as a special business. That is last year's AGM notice. And what is ordinary business? Adoption of accounts, declaration of dividends, appointing a director in place of the directors who are retiring, and appointment, the reappointment of auditors. In the sphere of audit appointment, there is a change, as you would know, that section 139, the term of the auditor is now not 1 year, it is 5 years from the conclusion of the AGM in which he is appointed till the conclusion of the 6th AGM, which means that he will hold office for a period of 5 years. That is a new thing, therefore. And earlier, there was a need for a ratification also every year. Now, that clause of ratification has been done away with. So, mostly now ordinary business would be adoption of accounts, declaration of a dividend, and appointing director in place of somebody who is retiring. And most of the time, they being eligible would offer themselves for reappointment. All other business other than ordinary business is special business. Therefore, it has to be given separately. And it requires explanatory statement under section 102. In the case of extraordinary general meeting, and this ordinary business, 4 items which I mentioned, only with reference to the AGM. In all other cases, extraordinary general meeting, etc., all businesses are special business. And this should be in the form of a resolution. Here in this case, it is getting one of the directors reappointed with a remuneration. and that is being passed as a special resolution. Resolution giving the complete details, and narrations are to be given in the explanatory statement. That is how we draft the notice, the first part of it. Ordinary resolution is one which can be passed by, and now this one is ordinary business and special business. Here we talk about the ordinary resolutions and the special resolution. Ordinary resolution would only require a simple majority. Mostly it will happen by show of votes, show of hands if it is possible. And it can be put to vote. If show of hands doesn't work, you can demand a poll, and based on that it will be put to vote, where the shareholding will play the major role. And it is not just one person, one vote. It is one share, one vote. Not in the strict sense of it, in the proportion of your shareholding. But special resolutions would require a 3/4 majority. 3/4 majority, 75% should vote in favor of the resolution. A notice of the meeting should state that a particular resolution is proposed to be a special resolution. In the case where I referred, they have said that to consider and if thought fit, to pass with or without modification the following resolution as a special resolution. And special resolution they have given in bold letters. That's a good practice so that it gets noticed. So which means that 75% majority is. Sorry. Yeah, that is about the notice, the contents of the notice, section 101. And this explanatory statement, as I mentioned earlier, I've just given one example, resolution for appointment and remuneration of a director, not just reappointment. All the details like his qualification, experience, etc., earlier remuneration which was growing, all those details are to be given in the explanatory statement. Or there is an expansion proposal which requires the borrowing requires detail excess borrowing in excess of the limits which can be approved by the board, requires an AGM resolution or EGM resolution. Then it should give the details of the project. The company is embarking on a major expansion project. The detailed project cost details are given on that. If the promoters are bringing in so much fund, there is so much of equity funding, it is required to borrow so much, or rather it is proposed to borrow so much, and therefore the approval of the company general meeting is sought. So the explanatory statement earlier, those who have used to the practice, we used to have in 173(2) of the Companies Act 1956. Now it's 102. It is an essential, important attachment to the notice calling the annual general meeting or extraordinary general meeting, as the case may be. And in the notes, if there is e-voting, because if it is e-voting in the sense that if AGM is held in a virtual mode or other audio-visual mode, then e-voting has to be enabled. And normally, in such cases, what we have seen is listed companies, in spite of the supporting them, they would engage the service. Either an in-house company secretary would do it. And e-voting, all the details, the modalities are to be given in detail in the notes. It runs into a few pages actually, and even in this case, there was an e-voting and all the details were given there. Proxy I did mention, and if it's a shorter notice, then fact that the consent has been received and the registered office should keep all the details of the shorter notice. This consent for holding it at a shorter notice, which is to be kept at the registered office. That is to be given in detail. And the secretarial standard, the ICSI secondary standard, ICSI secretarial standard 2 gives a detailed guidance on the drafting of the notice and the related matters. That brings us to the board's report. Very, very important provisions. If one is involved, 134 is the section, the relevant section there. Also talks about financial statements. According to me, financial statements should not have come here. There is a complete built-in section for financial statements, section 129. I'm sure that the speaker who is going to deal with Schedule 3, amended changes in Schedule 3, financial year 21-22 onwards, will surely make a reference to 129. And through 129 only, he will travel to the Schedule 3. He talks about the form and contents of financial statements, making a reference to Schedule 3. So board's report is section 134. And there are rule 8 and 8A of the company's accounts rules 2014. It's in the accounts rules because they have brought in financial statements here. That's bit of a mixing up as far as the drafting are concerned. As you know, the director's report should mandatorily contain Form MGT 9, which is an abstract of the annual return. You know, the annual return, which is filed under 92, section 92. An abstract of MGT 7 it's a short form of that. MGT 9 has to be there in the body of the board's report. AOC 2, disclosure of particulars of contracts and arrangements entered into by the company with related parties. This is very important that the board would do it, and the board's report should contain. So if we are drafting it, it's making a one-time drafting of a format and then customizing it year after year for changes, if any, which is happening from time to time. That is the way we would do it. And there are very detailed contents which are required to be included in the board's report. The web address, if any, if the annual return is placed there. That's how the section is drafted. The web address, the company has a web ID. Website address has to be given. And if the annual return is placed there. Complete details, the number of meetings of the board and the dates on which the board meetings have been held. These are all additional information for the shareholders. Here, it is so much relevant when it comes to a listed company or a large publicly limited company. But here, this is applicable for small and medium companies also. We'll come to that. Now we are dealing with this small companies. They are also small companies and offices. They are also required to have this requirements in the board's report. Director's responsibility statement, as referred to in subsection 5. We will see what are the contents of the director's responsibility statement. It is quite heartening. It's quite encouraging that the maximum thrust in the director's responsibility statement is on the accounting related matters, internal controls, compliance with accounting standards, judicious selection of accounting policies, and so on. Moving on. The details of frauds reported by auditors under subsection 12 of 143. Let me take 2 minutes to touch upon 143 in detail. Chapter 10 of Companies Act 2013. I repeat, chapter 10 from sections 139 to 148 is the most important chapter for auditors. It is audit and auditors. Chapter 10, audit and auditors. In that, we have section 143. 143 is captioned as powers and duties of auditors and auditing standards. I repeat, powers and duties of auditors and auditing standards. I make a reference to what the Honorable Vice President Talati said. He's talking about the compliance with standards in auditing. He did refer to SAS, SREs, SAEs, and SRS. Now here, 143.9, subsection 9 of 143. Very, very simply said, I would say that it's the single line, but it's a very demanding line as far as our profession, practicing chartered accounts are concerned, those who are in the sphere of corporate audits. Every auditor, not every company, every auditor shall comply with auditing standards. Now, when it comes to CARO 2020, Sharma sir would tell us that at every point of time, we need to have detailed discussions with the management and detailed representations taken from the management. One is reminded of SA 580, which is written representations. What we call it as a management representation letter. MRL, in our office, we call it LOR, letter of representation, which is quite important. So 143, there's a reference, 143.12, coming back to this. 143.12, it is from 143.11 that we go to CARO. 143.11 empowers the central government to issue orders on matters to be included in the auditor's report. All the 227.4 capital. Here it is 143.11, and it is in exercise of those powers that the government has been issuing orders. The MC has been issuing CARO 2016, and now the amended version of CARO 2020. Here, the board has to give details of what is reported on 143.12 by the auditors, unless it is reportable to the central government. Other than those, it is reportable to the central government. If the quantum of fraud, quantity or amount involved in the fraud is more than 1 crore, then a report has to be given to the central government in ADT 4. CARO 2020 has a reporting requirement there. That is from the auditor's point of view. This is from the preparer's point of view or the board's point of view that they should disclose. Explanations and comments by the board for every qualification, reserve or reservation or adverse remark or disclaimers made by the auditor in his report. In lighter vein, we can say that we are the people who would qualify or probably make an adverse remark or a disclaimer, and also sit with the management and draft the director's report in how to say that the corrective action which you're going to take. So it's something like a twilight role, but then it's also helping. This has to be kept in mind that if there is an adverse remark in the auditor's report, the fullest explanation for why that happened and what would be the corrective action which would be taken has to be given by the auditor, the board. To the fullest explanation has to be given by the board. The state of the company's affairs, how they are doing, particularly you would see in the annual report of listed companies, the board is very loud and vocal on what happened to the company during this pandemic, which is a one of we can say black swan event, and what is the outlook? For example, I am sure that in Andhra Pradesh also, tourism was kind of dead, and nobody was willing to travel, daring to travel. But today, if in Kerala, if you see, most of the hill station resorts and backwater resorts are booked, fully booked. And there's a new term which is evolving. It's called revenge spending and revenge tourism. Revenge tourism. People who have not been able to travel today would travel with vengeance. And in the sense that revenge tourism is that they want to really break free, go somewhere, because they have been confined for a long time, not being able to travel. Even elderly people, they were taken out in everywhere. I traveled up to Thekadi. I know some of you would have come there for a program of the Pondicherry branch as a faculty on Schedule 3. So the uphill traffic was kind of bumper to bumper traffic on a weekend. And last week I had been to Kumaragam, which is a backwater area of Kerala, where we have the houseboats and all that. There also I was seeing that the resort where the program was held, and all the neighboring, even the highly priced, the prices have not reduced. In fact, post-COVID, some of them have raised their rates. And high-priced resorts where a villa would or a cottage would go for 15 to 20,000 rupees a night are all fully booked. So those things that the state of companies affairs, the directors would normally like to paint a rosy, unrealistic picture. But then it is important that whether we like it or not, either in a flashy fashion or rosy fashion, but the section mandates that the board should give complete details of the company's affairs. So again, a format can be shared, absolutely. I will share my email ID in case if it's required. In fact, I had sent, some of you would have received, I had sent a mail to all the members in the South as an initiative to save time of the members, the format of the Schedule 3 in editable Excel format, and also a Caro report, which is editable in Word format, along with the PPT, which I had prepared for Caro and Schedule 3. I hope most of you have received it. If you have not received, I'd only be happy to send it across you. As before I conclude, I will share the email ID to which you can shoot questions or ask me to resend if you have not received. Moving on, the financial summary and highlights, turnover, gross profit, gross margins, net profit, borrowings, dividend, all those things, expenses, direct expenses, indirect expenses, all those things. Material changes which have happened from the closure of the financial year, financial in the nature of business and the effect on the financial position of the company. That is from the closing date to the date of the board's report. If there are material changes, substantial changes in the business and how it would impact the financial position of the company, the details are to be given. All the details of directors who are appointed or resigned during the year, of directors, not of auditors. Significant material orders passed by the regulators impacting the going concern status and company's operations in the future. If there is a regulatory issue, for example, if you have a problem with mining, there could be an ecological issue, environmental issue in the case of a mining unit where it is a lot of money has been invested and the license is not granted, or whatever reasons for, I would say that use of explosives for some other purpose. This has happened in some parts of Kerala. The mines will get a lot of explosive that has been misused and therefore license is cancelled. And if that's not revocable, then probably going concern would be at stake. Or even a huge demand of GST or anything of that sort, which can have a huge impact, making the going difficult for an organization. The board should be the idea is to say that the board should be completely transparent to the shareholders, give them the fullest possible, the maximum amount of information to the shareholders in the annual report. So that is what the 360-degree annual report, what we are talking about is, enabling chartered accountants to get into this part of the service areas, and which is a specialized area, and therefore one has to be clear on that. Related party transactions, which are referred to in section 188 in the form AOC2. I did mention AOC2 a little earlier when we discussed the mandatory forms along with MGT 9, which is an abstract of the annual report. Now, related party transactions, every company is supposed to maintain a register under section 189 of all the related party transactions. Remuneration to directors, transactions with the partnership firms in which directors are partners, transactions in which with companies where a director's wife or spouse is a director, private limited, public limited. All that has to be given in the fullest form in the director's report. A statement of this is for other companies, small companies we have completed. In addition to this, these are all required to be given. In addition to this, bigger companies which are not small companies and OPCs. And how is a small company defined? The definition has undergone a change twice. Now, a small company under section 2, subsection 85, if I remember correctly, 285 defines, 2 subsection 85 defines the private small company as a private limited company whose paid up capital does not exceed 2 crores and whose turnover does not exceed 20 crores. This is the definition of a private limited company. And the joinder is and. Neither the turnover should exceed 20 crores nor should the paid up capital exceed 2 crores. Only these two conditions are cumulatively satisfied. It can be falling under the definition of a small company. Small company has a lot of exceptions and exemptions under that. For example, cash flow statement need not be prepared, need not be presented by a small company. That's how it is. And explanations or comments by the board on every qualification, adverse remark, or the statutory and secretarial audit. Here they have to give the explanation of a secretarial audit also. Because these big companies who are required to get their secretarial audit done, the details are to be given. And particulars of loans, guarantees, and investment under section 186. The amounts that are reserved, transferred to reserves. The amount of dividend declared, interim as well as final dividend. The director's report should very clearly mention about that. And we have already seen this additional, of course, that's a duplication. Material changes and commitments from the financial year end to which the financial statements relate and the date of the report. Here they talk about commitments also. In the case of non-small companies and OPCs, other companies, I've listed them as other companies. Measures which are taken for conservation of energy, technology absorption, foreign exchange earnings, and outgo. This to be given. And material here, conservation of energy, there are a lot of things which are happening. Solar and non-conventional energy resources, if it's there, then it has to be highlighted in the board's report. They are all good initiatives. Remuneration policy for the board. CSR policy developed and implemented by the company initiatives taken during the year. Now, CSR, let me take 2 minutes. CSR came in as a very friendly section, 135. There was no penalty, there was, or just you just spend it. But today, if you look at 135.5 and 135.6, it requires in the CARO also, so sure that Sharma sir would enlighten us, that in CARO also, there are reporting requirements specifically in the Schedule 3 as well as in CARO. The auditor has to report whether the amounts which are unspent has been ongoing projects and other than ongoing projects have been either transferred to the government funds or to a designated accounts, depending on the case. So CSR policy developed, because the board has to have a CSR committee where CSR is applicable, with 3 directors of which 2 should be independent directors. It's a mandatory requirement. And I'm happy that some of you are noting down. But then somebody asked this question. I saw it in the chat box that whether this would be shared. I'm only happy to share the slide deck with you to the branch, and the branch can disseminate send it to the share with the members. I have absolutely no problem. Some homework has been done, but I do not attach much of an IPR to this. This is, of course, a recap exercise. The topics which we have been dealing regularly, slightly a detour, or rather, it's a new topic. So I embraced it with some bit of extra attention, and I hope I'm touching upon all the important points of the notice as well as the director's report. At the end of the session, if time permits, we can take a few questions, but I don't want to, crash into the time which is allotted to Sarma sir. And moving on, we have the development and implementation risk management policy. Again, the company law committee's recommendations, even for smaller companies, they feel that complete risk management policies of the board has to be very clearly mentioned in this thing. And here they talk about that threatens the existence of the company. Long-term existence of the company. It could be a policy change. It could be a change in the business environment. It could be obsolescence due to technological advancement, the product getting completely out of the market. So many products have gone out. So many products. People have failed to transform. We used to have all these companies which we have disappeared. In our younger days, in college days, we used to have the films, Konica, Kodak, and all that. Those companies are not there in the scene at all now. You know what happened? Technology. I'm just giving one slightly old example. There's so many of them where the brands could not continue in spite of having a client base, a huge customer base. They could not because they failed to transform. Transformation is the key in these challenging days for every one of us individually and for the profession. Unless we really transform, it will become very difficult to sustain and also to have growth. Sustenance is very important. In the last 2 years, many of us have not been really able to grow the way we wanted, but some of us have got into new verticals. One area which my firm has got into is I think Andhra also has a huge startup ecosystem. Startup advisory is a new area where we've developed. Of course, insolvency practice is something which one of the partners have passed the exam and started working on, which is creative. So there are a lot of new areas we should look into. Confining to tax practice and just filing GST returns for the client may not be sufficient. Younger members should, of course, bring in new vibes, new dynamics, and new ideas into firms where they join, even if it is your own parents' firm. Since we have a large number of members, I would urge the younger members to bring in something new instead of just biting a piece from the cake that the firm has built up over the years. Add a new type of an icing to the cake. That is how we can grow and excel and move forward, not only in terms of revenue, but in terms of deliverables and sought after form, which can deliver value in different verticals. And that way, specialization is the key today. Gone are the days where everyone would do everything. I think there should be separate vertical. If you go to large firms, including the big four, you would see that there is kind of watertight compartmentalization, verticalization. The indirect taxes partner, the direct taxes partner, the compliance partner, the audit partner, the taxation partner, or so on. And see, therefore, that's very important that we fall in line with that kind of a thinking. And the board's report should also have formal annual evaluation of the board's performance. Listed and other public companies have to give the board performance, how they have done. Individual directors' performance have to give the details of. Moving on, the changes in the nature of business, a new line of business or discontinuing some business, the full details have to be given in the director's report. KMP, key managerial person who were appointed and resigned during the year. Integrity, expertise, and experience of the independent directors appointed during the year. Statement regarding the opinion of the board. Now, independent directors, many of the professionals are opted as independent directors. Listed companies, they are mandatory. Large public companies are mandatory. But it's a very, I would say that onerous responsibility that of an independent director to remain independent and to be kind of delivering value to the shareholders, putting a check and balance on the promoter directors or people who are actively involved in the business. He should act as something like a judge on the performance, the transparency of the financial statements, the reporting practices. Put together, we can say that there should be the champions of governance in every company. They are acting as good governance, champions of good governance. In the companies, they are acting as independent directors. The name of companies or become or cease to be subsidiaries, joint ventures, associate companies during the year, the details have to be given. All details relating to deposits. In Chapter 5, there are a lot of restrictions for private as well as public limited companies to accept deposits or loans from other than directors and all that. Therefore, that has to be kept in mind. Section 73 is the relevant section. In details of deposits which are not in compliance with requirements of Chapter 5 of the Act. The penalties there in Chapter 5 are the most punitive, which is running into crores of rupees, and plus imprisonment. Therefore, one has to be very clear on accepting deposits. Taking money, particularly from related entities, partnership firms, and all that, as a prohibition, one should keep in mind. The Companies Act 2013, from that angle, it's often referred to as a 3S Act. 3S: Satyam, Sharda, and Sahara. These are three companies which made major goof up in the corporate space of the country. And in Sahara, it is said that they were operating, siphoning out funds through 500 private limited companies, 500 plus private limited companies. That is where the Act had become quite friendly. 2013 Act, in the initial drafting of it, of course, after doing a lot of tinkering. So the focus is today ease of doing business and reducing cost of compliance. At least for small companies, they should reduce. So with that, it started. But today, one has to be careful about the transaction which companies get into. It cannot be like a partnership form. The framework of law is quite clear and also stringent, and it's very highly punitive. Significant and material orders passed by the regulators impacting going concern status and companies' operations in the future. That is again there. Adequacy of internal financial controls with reference to financial statements. They call it ICOFAR, internal financial controls. That is internal controls or financial reporting. That's how the institute wanted to call it when they wanted to have IFC. Said IFC cannot be the completely checked by the auditor, internal financial controls. The internal controls or financial reporting. That's how the institute interpreted as. Maintenance of cost records, where it is mentioned in 148 is a section on cost audit and cost records. Cost records, I mean, of course, there is a reference. So in Section 128 as well. And therefore, if cost records are specified by the central government in applicable cases, it should give a complete details of how they've complied with the provisions. Internal Complaints Committee. This is again specific areas which are there on harassment of women at workplace, on the constitution of Internal Complaints Committee. Every listed company is supposed to have this, and sexual harassment, sometimes we see that unfortunately happen in workplaces. So the board should make sure that there's a system in place to prevent, and if that happens, to take prompt corrective action or penal action. In such cases, it has happened. If there is any proceeding pending under the Insolvency and Bankruptcy Act, IBC, during the year, with the status at the end of the financial year. Because if the company is a corporate debtor which has been put to a CIRP, corporate resolution process, insolvency resolution process, then that has to be highlighted. Valuation done while taking loans from banks. Here is these are all relatively new requirements. Difference between the amount of valuation done at the time of one-time settlement and valuation done while taking loan from the banks, financial institutions, along with reasons therefore. What can happen is they would have taken a loan at a very high valuation of assets, and in a span of 2 years, 3 years, after taking the loan, they would probably become a willful defaulter and then revalue the assets and an auction take it back. A lot of unhealthy practices. So here the board has to clearly state that if there has been a one-time settlement, how much is that you valued the assets at the time of taking the loans? One. And how much is that now when you're going for an OGS, which is a one-time settlement? That brings us to the specific end of the specific provisions. Here it's the director's responsibility statement, where the directors have to mention that the applicable accounting standards have been compliant. I think there's a section on accounting standards. accounting standards as well as in applicable cases, India is a very, very important. Most of them are mandatory. But if you look at the corporate reports, annual reports, and also during our interaction with regulators like the ROC, it's a feeling that compliance with accounting standards is still dismally poor. One is the awareness is not there. Two is that they're not applied to. We still have a one-pager notes on accounts and things like that, which should change. Accounting policies have been adopted judiciously and applied consistently. Maintenance of adequate accounting records. Fact that going concern is not a stake that the company would pull on for into the foreseeable future without any difficulty. Internal financial control, specifically in the case of listed companies, and proper system to ensure compliance with applicable laws. That is the compliance governance, as far as that is concerned. Compliance governance, that is director's responsibility statement, is a very important paragraph in the director's report. The director's report will be signed by the chairperson if he is authorized by the board. If not, shall be signed by at least 2 directors. One of them should be managing director if there is one. And the board's report, before it is signed, has to be placed in the director's report and it has to be approved by the board. Penalties are fairly clear, but not too small. 134(8) speaks about the penalties. For the company, the penalty is 3 lakhs, and for officers of the company who are in default, it is rupees 50,000 each per director. So these are the points which I thought are relevant to have a discussion on notice and director's report. As we look at with a 360-degree angle approach to annual report, normally the auditor, the chartered accountant, as the auditor is concerned more about, or rather should be concerned or focus more on the financial statements, and all the more important, there's a report, the main body of the report, as well as the CARO report, and also in cases where IFC is applicable to the internal financial controls report. But here is a case, an attempt by the Corporate Laws Committee, as the Honorable Vice President rightly said, to give a larger perspective to chartered accountants in practice, to be of help to smaller clients who would require our support, and in understanding what are the provisions relating to notice of meetings, AGMs and EGMs, and of course, Director's Report 101, 102, and 134 being the relevant sections. So thank you all for having me, as I mentioned earlier, as the first speaker for this 5-day refresher course. If time permits, I will take up. We can have a few questions. If there are any questions, I'll try to answer. And with that, let me conclude thanking the organizers for the opportunity once again, and all of you for staying through in large numbers. We still have 271 logged in. I hope most of them are with us listening and having an effective discussion through the last almost close to 45 minutes, 1 hour. Thank you so much.
Sir, I think we have some questions in the chat box also, sir. I request the participants to type the messages once again so that we lost some messages because of this posting of membership number and name. If you can please once again post the messages, sir will be more than happy to answer.
Yeah. I will start with Mr. Tushar's question. Ordinary resolution 3/4 majority in terms of numbers present. No, sir, only simple majority is required if it's an ordinary resolution. Please clarify whether all special business requires special resolution. If not, what are the resolutions requiring special resolution and ordinary resolution? Sir, all special business does not require special resolution. I can give an example. Enhancement of authorized capital. Enhancement of authorized capital requires the consent of the shareholders in general meeting. But that can be done through passing an ordinary resolution. So it's a special business with an ordinary resolution. Your question is, what are the resolutions which require special resolution and ordinary resolution? I cannot give an exhaustive list, but then I can surely get back to you with the section which talks about the resolutions which are to be passed as special resolutions. I'll just get back to you. Regarding notice of second AGM, do we need to mention regarding appointment of auditor if auditor is appointed in first AGM for 5 years? No, sir. This is Ganesh. Mr. Ganesh was asked this question. No, sir, it is not required. I did mention, because ideally, if there is no dispute, if it is going smooth, the first auditor of the company is appointed by the board. And in fact, it is a mandatory. It says shall be appointed by the board within 30 days. Let us say that GSR is appointed as the auditor of the company. GSR, sir, you're okay to take up the audit, no? As appointed as the first auditor. First auditor. Sorry, sir. Secretary, sir.
Definitely, he will be happy.
He'll be happy. Okay, yeah. So he's appointed like as the first auditor, whose term expires by the first AGM. So in the first AGM, he is appointed for a period of 5 years. So that further appointment, unless there is a change, resignation or whatever, it need not be mentioned for the next 5 AGMs. And there is a need for ratification earlier, that has been done away with. So I hope I have answered your question. So for the next 5 years, it is not required to be mentioned at all. Sir, can please share once again? I am from Kolkata. Samarji, you can unmute and tell me what you would like. This message is not clear. Kindly share the format again. Okay, can you share what's the format? If you are from Calcutta, you have to send me the mail ID. To the south, I had said you have to send your mail ID. My mail ID is easy to remember. My name is Jomon K. George, CA Jomon K. George @gmail.com. With the permission of the organizers, I am sharing this. There's no other intention other than sharing of knowledge and learning together. Sir, can you please share formats once again? Tamir@gmail.com from Kolkata. Okay. Please send a mail, sir. Are we as we are joining with name and membership? Why should we again repeat in chat? Okay, that is
actually all the member participants are not renaming themselves appropriately, sir. We are finding it difficult to mark the attendance. So we are again requesting them to type their name and membership number in the chat box. If you rename with your correct full name and membership number, it is not at all an issue, sir, that we can mark the attendance.
Sir, those small companies, Sadish has asked, sir, those small company definition has been revised in 285. But I have experienced that it has not been changed with respect to AOC 4 and MGT 7. It's the same with all places. Yeah, it is. AOC 4 and MGT 7 are concerned. There is no special relief or some relaxation for private limited companies. I mean, small companies. So it's all the same. The please share Excel format. Okay, that is okay. Section 143.5 only talks about penalty and non-compliance of 143.12. If there is, if there is lapse on the part of the auditor under other provisions of section 143, what shall be the consequence of the auditor? Sir, I think penalties, other penalties, general penalties are given under 147. I will double check. Just give me a minute. Checking with my partner since I'm in front of the screen, I'm not moving up. With due respect, please prepare Excel format of Schedule 3. Okay, right, sir. Rather than continuing the practice of copy paste, I think it's an instruction for all of us here. With due respect, please prepare the Excel format of Schedule 3 and Caro 2020 report by yourself, or it will improve learning and rather than continuing the practice copy. Okay, fine. I appreciate. Okay. If somebody needs, that is from Rishi Agarwalji. Appreciate, sir. Regarding notice of second AGM, yes.
CS Satish has a supplementary query, sir. MGT 7A is not being enabled for many small companies which are covered under the revised definition. That's MGT, what is his observation.
I will just come back to it. Regarding notice of second AGM, do we need to mention regarding about that I mentioned already? Okay. That question is being repeated by Ganeshi. Ganeshi, I have answered the question. It is not required. Do we need to mention regarding appointment of auditor? If auditor is appointed for the 5 years, it is not required.
Sir, is AGM recording is mandatory if it is made through virtual mode? Saurav Goyalji is asking, sir.
Recording.
Do we need to have a recording of AGM in case it is done through virtual mode? If not, what is the procedure to conduct in virtual mode?
AGM on the recording aspect, I'll have to check and get. I'm not too sure about that, but apparently there's a requirement to have it if it's under other words, I mean the audiovisual mode, OAVM. If it is there, I have to double check. And there's no other change in the procedure. What is other? I will just read the questions. Do we need to have a recording of AGM in case it's done through virtual mode? If not, what is the procedure to conduct in virtual mode? Virtual mode, you have to share. It could be on any of these platforms, Zoom or WebEx or the thing. You have to share the link with them, and the login details have to be given, and they would log in and with their ID, and based on that, the meeting will be conducted, like the meeting that we are doing now. Recording aspect, I think there is a requirement. I'm not too sure. Probably I will revert to the branch tomorrow. Do we have to mention the contract which does not require resolution in AOC2? No, resolution in AOC2. Resolution is different. AOC2, Nitin Furiaji, can you make the question clear?
AOC2 regarding the contracts with the related persons, it will be mentioned, sir. If no resolution is required to be passed, will it require to be mentioned in AOC2?
All related party transactions have to be disclosed. What is the first question, John? Yes, sir. To that penalty auditors, this thing. If you look at chapter 10, the penal clauses other than 143, what you mentioned, 143.12, that is Dheeraj Kumarji. That is found in 147, and section. It's a section. That's fine. The special resolution thing. I think 179.3. I'm just making a reference to 179. I think 179 is a section which talks about transactions which would require a special resolution. Consequence, if the auditor is not appointed within this time stipulated. It is clearly mentioned in 139, sir. Ananga Nathan, sir. That one is that if the board does not appoint, say that the company in general meeting shall appoint. If even the case of C&AG audit is not appointed, the board is given a power above the C&AG. The board shall appoint within 30 days, and then the power of the board, and then the board fails, the power of the AGM will come to play. CA Jomon K George at gmail.com. Sanjay ji has typed it in capitals. I mean, it is not case sensitive. So you have typed it right. CA Jomon K George at gmail. Yeah. Whether management discussion and analysis attached separately forms part of the director's report. Yes. That is not specifically mentioned. Yes. Management discussion and analysis, which is about, again, we mentioned about the affairs of the company, the present status of the company, risk factors, future plans, all those things should come under management discussion and analysis. Thank you for highlighting that, Asim sir.
Sir, Saurav sir is asking whether, if I may help you in reading out, in case the company does not comply with CSR requirements, does the auditor need to mention in audit report as qualification or disclaimer of opinion?
That I think Sharma sir would tell us today. It is specifically a reporting requirement under the CARO. But if you're asking whether it is under the main body of the report, according to me, in the main body of the report, there's a CARO reporting requirement. Main body of the report, it need not be mentioned. But the key, there is another aspect, the consideration of laws and regulations in an audit. I think it is SA 250 which tells us to be careful. So, like for example, if the company is to spend, let's say 5 crores and spend only 2 crores, the balance 3 crores have to be provided for. That provision is not made. It's a mandatory provision mandated under the Act. If that is not provided for, it might affect true and fair, and therefore that would require, in which case it cannot be a disclaimer, it has to be a qualification or an adverse, depending on the impact of it. Please refer say 705. 705 gives the guidance on how to modify a report, rather qualify a report. The difference, the line of distinction between qualified report and an adverse report. Otherwise, it's CARO reporting. It's a small amount and all that, not having a huge financial impact. Reference in the CARO report is enough. CARO, they are asking us to report under 135.5 and 135.6, which being Sharma sir's area, we will wait for sir to explain that. NGT 7A is not being enabled for small companies which are covered under the revised definition, sir. We recently had a discussion with the ROC here, and they are covered, NGT 7 not being enabled for small companies which are covered under S. Are you talking about 21-22 financial year, Satish ji? But 20, my compliance partner is also with me, Mr. Sean. He's saying that there was no issue with MGT 7A filing of small companies last year. If we are trying for 21-22, maybe the format change, I have to see, because we have not started filing annual returns for small companies this year. Do we need to have recording that we have answered? Yes. Is there any other question? Do we need to have, can we have email ID again, please? Yeah, okay. I will share. As we are joining with name, we can, in case of company does not have that, we have seen auditor need not. I hope I have explained. Directors of private limited company were also directors in a company incorporated outside India and doing business outside India. Private limited company doing business with that company incorporated outside India. Will this be under related party transactions? 100% yes. The location of the company is not important. It has to be there. It has to be, it will become a related party transaction. No doubt about
it. One question from Saroji. In case the company does not comply with state RERA laws, will it be part of director's report or the auditor's report?
Naturally, director's report. RERA, if there is a non-compliance and if there's a penalty likely to be levied, again one has to see whether it's an. See, if you look at the question is kind of similar to asking, is the auditor expected to look into compliance with all the applicable laws and regulations? The guidance is found in SA 250. I know consideration of regulation, laws and regulations in an audit. I think it's SA 250. So there it says that yes, to an extent, if it has had an impact on the accounts and audit function. So if RERA, there is a non-compliance about which no action has been taken, etc., etc., the auditor need not mention. The director should highlight that the Act or 134 does not say non-compliance has to be highlighted. But it is not part of the auditor's report, at least that much I can say, unless there is a penalty likely to be levied and that's a huge amount, and which may have to be paid, then it will have an impact on the accounts, and therefore that will have to be highlighted. And if it's not quantified, you can say that which has not yet been quantified.
Sir, someone is asking if AGM is virtual. In the notice to AGM, should we mention the platform like Zoom or Google Meet?
Yes, yes, yes. It has to be mentioned. I'll just give this from this. I'll just try to pick it up from what I have here. All the e-voting links, all that has to be given very clearly, because otherwise how will the members log in? That's in the case of listed companies. Listed companies, it is taken care of the registered transfer agents, and that's how it is. It is mandatory. It is on the part of the company. It is mandatory to send that. What disclosure needs to be given in board's report and financial statement, including annual report if company is not going concern. Private limited company incorporated 4 years back, but not business is commenced, so no intention to run the business. Yes, sir. If it is not, if it is inactive for 4 years, normal case, the ROC would have struck off under the new the provisions of Companies Act 2013. Otherwise, it is not done. Then director's report, leave around the director's report, the financial statements, there's no intention to continue the company. If it has not started business, it's a different scene. If it has started business, the figures may not be huge. Then, of course, if there is no revenue, there is maybe some accumulated loss in capital, the impact is not huge. But if it is a concern which had to stop business because of COVID impact imposed restrictions or issues, then it's a huge challenge. In fact, Institute, we had discussed, I think in Vijayawada also, we had a session last year on the impact of COVID pronouncements of ICAI. So, director's responsibility statement, I did mention that it has to be given whether the going concern is at stake or not. But if going concern is at stake, SA 570 gives us a guidance. Standard and auditing 570 gives us a guidance where all the assets and liabilities have to be written down to realizable value. Even if you have some fixed assets, you may sell it immediately. They're not going to be used. So technical evaluation on what is the value realizable has to be done. And they have to clearly say that going concern is at stake. And that has to be done. If it is not done, and if the auditor is convinced that going concern is at stake, going by the the provisions or rather the situations contemplated in SA 570, you should qualify the report that in spite of having so many issues, which makes it terminally ill, the company terminally ill, financial statements have been prepared on going concern basis, and therefore true and fair is not in place. Adverse report will have to be. Directors, of course, going concern in the director's responsibility statement, it is there. Financial statements, of course, if it is complying with, all these changes have to be made. Otherwise, financial statements we would prepare in a way which normally as we would prepare. Section 140 penalty for 147(2). I did mention does not provide for any penalty for section 143. 147(2) provides penalty for non-compliance with 139. So there's a general provision of penalties which are not covered elsewhere in section. I'll just check. 403 is it not? What happened if it was 2019? No, I think there is a section which deals about general penalties. Is it 403 is additional fees, no? Not come 403. Just give me a minute, sir. Unfortunately, due to internet connectivity issues, I could not get your email ID. Just am I doing it for all? Gmail.com. I think it is not to everyone who can say, yeah, okay. gmail.com. I think I have given to Mr. Is it visible for all?
No, sir. You gave a direct message, I think. CA
Jomon at gmail.com. To all. 1 second. Somebody had typed it in earlier this thing to all.
To everyone.
To everyone. Just let me see. To everyone. Yeah. Is it visible for all now? No, not yet. I was just trying on this thing. It is ca.jomon.george@gmail.com. I'm not able to, I'm typing to everyone, but I'm not going through. There's some technical problems.
We will share it. Actually, we have created a WhatsApp group. We will share it in there itself.
Yeah, okay. Thank you, Chairperson. What's the general provision? Sir, to the penalty under chapter 14, sorry, chapter 19, miscellaneous chapter, they've given punishment for where no specific penalty or punishment is provided. It's coming under 450. But I will double check because 143, I thought the penalties were in 147. We'll double check. One sec. Okay. I think there's apparently a loophole. That's what my compliance partner shares with me. But the company law committee recommendation today speaks of specific penalties under 143 included. There was a question from Saurav Goyalji. There were only 2 directors. I don't think the question is complete. Saurav, you can probably unmute and shoot or type in the. Kishore sir, we have finished all the questions, no?
Yeah, we have exhausted the chat box, sir, but 1 or 2 participants are requesting the PPT, which you have presented today. If you can kindly share with us, we'll be able to post it in this chat box, or we will send them.
No, I had offered to do that. I'll share it with the branch. I'll send to Vijayawada ICA.org, from where you can send to all the participants.
Yes, sir. Definitely we'll do that, sir.
Satish ji had said, I guess, is section 450. You are right, sir. Satish, you are 450. Yes. Thank you for the support. Yeah.
Yeah. Thank you, Jaman sir. Whenever it is auditing standards or whenever it is auditing, you are the first person speaker in our panel, sir. Vijayawada branch panel, you are the first person, and you will be remembered for auditing and the things relating to auditing. Definitely, we expect your association with our branch in the future also, sir. Right.
Thank you so much. It's my pleasure, and I'm so happy that we had so many questions, which makes any speaker happy. In the sense that one we are listening to is that we are on the topic really actively, because there are so many members who are in corporate law practice. It is evident. That's quite encouraging. And those who are in corporate law practice, I think, should urge others who are not there. Of course, it will add to competition. But surely, if you get more chartered accountants on board to do corporate law practice, ideally combined with an IB practice, FEMA advisory, and all that. Newer areas should emerge, sir. That is the way we can go forward. So thank you so much, Sita ma'am, all the managing committee members for having me this evening. It will be my pleasure to do any program for the branch. Since I'm not holding any official position now, I'm disposable time, and therefore turn focus more on academics, and therefore I'm just a call away for any program that Vijayawada branch is so close. I come there for the national conference during my chairmanship. Nagavalli madam was the chairperson, no, that year?
Yes, sir. 2019.
1920 was my. So nice, so nice to interact with so many of you. 280 still on board, 260.
Yes, sir. So, we have clocked 300 registrations, sir. Apart from our 200 ARS members.
Great.
So people will join just as job. But one thing is we have this YouTube recording, wherein if they are not able to catch up this session for some time during the session is going on live, they can still watch it on live or recording.
Later, they are convinced.
YouTube, yes, sir. But they won't miss. And also one more interesting fact today, Asim Rai sir, a senior person, he is very much very attentively listening throughout this session, and also I have observed him noting down certain points.
Yeah, I did mention in my speech. I was seeing that. I said some of you are noting down. I'm so happy about that, particularly senior members. So yes, learning is a continuous process, sir. You are inspiring every one of us. And I'll surely share the PPT with the branch, and special thanks to that mention. Yeah.
Thank you. Thank you very much, sir. We will skip into the next session with Subramaniam Sharma, sir, who is patiently waiting on the sidelines, sir. And of course, he was getting knowledge updated. Of course, he's a very senior member, and he loves to listen to Jaman, I suppose. So what to Narayana, CA Narayana, treasurer of the branch, to say a few words about our next session speaker, Subramaniam Sharma sir.
Thank you, sir. Thank you, sir. I am happy to introduce today's second session speaker, Subramaniam Sharma Gowda. He was born on 16th December 1956. He was become graduate from Achayappa's College, Madras University in 1977. Qualified CA in 1982 with articles training in Madras R. Janaki Raman and Co. Chennai. Partner R. Janaki Raman and Co. from 1980 to 1992. Partner Madras Lodha and Co. Chennai from 92 onwards. Exposure to audit of large corporates, consulting in direct and indirect taxes. He was presented papers in conferences of Chartered Accountants Study Circle on simplification of company law, lead discussions in study circle meetings at T Nagar West Mambalam Study Circle on NACA's accounting standards, usage of Excel as audit tool, implementation issues of India's accounting standards, discussed on recent changes in income tax returns at Vellore branch of ICAI, lead discussion on AIS 22, taxes on income, and AIS 29, provisions, contingent liabilities, and contingent assets for refresher course on accounting standards for non-corporate entities held by Vijayawada branch. Lead the discussion at SIRC in December 2021, 3 auditing standards, SA 510, SA 520, SA 530. Lead discussion on how to use Excel for tax audit purposes at the Society of Auditors. Lead the discussion on GSTR 9 and GSTR 9C for the staff of JK Industries Limited, Chennai plant. Written articles on how to use Excel functions in audit for the monthly magazine of Chartered Accountants Study Circuit. Presently writing articles on various auditing standards in the monthly magazine of Chartered Accountants Study Circle, completed on sampling, evaluation of material misstatements, initial audit engagement, etc. With this brief introduction, I welcome Mr. Subramaniam Sharma Gowda sir to present his presentation.
Thank you. Am I audible?
Yes, sir. Please go on.
Okay.
Yes, sir. You are audible, sir.
Okay. It's sharp. Slide. Okay. Good evening to one and all of Vijayawada branch. Being a person from Andhra, though settled in Tamil Nadu and my education is all in Tamil Nadu, my love for Telugu language is such that I always start with the thing, Endaro Mahanubhavalu, Andariki na Vandanamalu. Today is an important day, not only for me, but also for the members, because if you look to the date, it is 23rd of May, 2022. Whether we like it or not, we always get the SA 230 wherever we start the meeting, wherever you start any institute meetings and other things. So SA 230 deals with the audit documentation. And we are trying to discuss something on CARO, particularly in view of this documentation and reporting, which is very much important for us to make out this particular scenario. Now, coming to CARO, this reporting is there for a very long time. Even before 2003, it made one avatar. 2003, it came. Then in 2016, the CARO report deleted some of the classes under 2003 report. Again, the government thought to bring out 2020 report, adding new points in CARO report. In addition to, they thought they should bring back some of the items of 2003 report itself. so that the whole thing can be a clearly documented scenario. The duties of the auditor in SA 705 is, in addition to the report specified under the Companies Act, the auditor is required to report on extra matters that has been asked to be done by means of an order. So it is coming on that particular subclass. The CARE report has been introduced. And fortunately, unfortunately, we have to comply with this requirement. If you look at the present CARE 2020, we have to report almost 45 points on various issues, totaling around 45 items. Now, I just made a tabulation in such manner so that at least we can understand what is the thing. For fixed assets, we have to report 5 points. For inventories, we have to do 2 points. For loans given or investments made or guarantees given, we have to report 7 points. On statutory dues, 2 points. Then on capital, 2 points. Then willful defaulter, 1 point. Nidhi companies, 3 points. Related parties, 3 points. Then CSR, 2 points. Going concern, 1 point. So if you look into it, roughly around 45 points we have to report on this particular thing. And our CARE reporting will be, for any reasonable company, it should be minimum 4 pages. Whereas our main report is going to be only about 5 pages, even assuming that we are giving all the things in a annexure point. Presently, what I understand this particular thing. Now, to cover all the 45 points within a period of 1 hour will be slightly difficult. And CARE 2016, it is there for a long time. And as part of this today's discussion, I would like to take up the issues which is arising out of the new points that has been included in the CARE 2020. Of course, I'm also available if any issue is raised on the points which is not covered, we can always explain and clarify the doubts wherever it is required. At the beginning, I would like to convey that I'm going to share this PPT to Vijayawada branch so that this can be distributed to all the participants who are available. Now, another aspect what I have done is, as a supporting to this PPT presentation, I have prepared one Excel file which contains 2016 checklist for CARE. Then for applicability of this CARE one sheet, then some aspects like internal audit, what are the requirements, another sheet, and particularly class 3.3, which roughly deals with about 7 points, one Excel sheet, which I thought would be useful so that at least can be easily made. Excel down. CARE 2020, it's applicable to every company incorporated under the Companies Act. It is also applicable to companies defined at Section 242 of the Companies Act, namely the foreign companies. The branch offices of the companies in case branch offices of foreign companies situated in India, in case audit is done. Now, wherever Indian company itself is having branches, where branch audit is done, this CARE is to be reported by the branch auditors on the branch activities as part of his report to the statutory auditors. Then audit of project offices or license offices established by a company outside India is to be done. Then private companies, there are certain benefits have been given in respect of certain categories. of private companies, this order is not applicable. Now, what are those conditions? In the case of private limited companies, if the private limited company is a subsidiary of a public company, it is applicable. If the private limited company is a holding company of a public company, it is applicable. Then, where the three clauses are there, which has to be satisfied, all the three clauses. If all the three clauses are satisfied, then CARO is not applicable. But if any one clause is not satisfied, the CARO is applicable. This is not a change from 2016 audit to 2020 audit, but for repetitive purposes, we can have a thing where the paid up share capital and free reserves is less than or equal to 100 lakhs, where the borrowings from banks or financial institutions is less than 1 crore, and total revenue as per the profit and loss account is less than or equal to 10 crores. If these three conditions, all the three conditions are satisfied, CARO is not applicable. So wherever these things is satisfied, the auditor can simply say that in view of the fact the company satisfies the conditions prescribed for exemption under the CARO is not being reported. So this is the basic thing which we have to keep it in mind. It is always better to keep this checklist as part of our audit file so that this can be made use of. Now I just wanted to go the clauses where there is a change in this particular thing. I just wanted to cover that particular thing. Subsequently, in specific request statement, we'll try to make on this thing. In case of fixed assets, the new clause which they wanted to make it appear, whether the company is maintaining a proper record showing full particulars of intangible assets. This is the question, which is a new addition in fixed PPE. 2016 audit did not contain anything with regard to that intangible assets. Now, what is exactly the intangible asset? Now, intangible assets is defined in case 26 as identifiable non-monetary assets without any physical substance held for use in the production or supply of goods and services, or for rental to others, or for administrative purposes. If it satisfies these conditions, it is an intangible asset. Now, what can come within the intangible assets? One aspect is a software. Software either purchased or software which has been developed. This can come as an intangible asset. Then you can have the licenses, we can have the patents, we can have the franchises, we can have algorithms, domain names, all those things comes part as intangible assets. Now the issue comes in this particular thing is, are we accounting the intangible assets in the books? Generally, the software, whenever we purchase the software, we account
Sorry
it
to
either
disturb you.
Yeah.
Can you make the screen as full screen, sir? So that it will be more visible.
You want it to be made bigger one?
Yes, sir.
Okay.
Yes, sir.
Okay.
And some audio issue is also there, sir. Sometimes it is getting disturbed. Can you please check? I mean, I think you are moving. Some audio issues there, sir.
Now it's okay, madam?
No, it's okay, sir. Sometimes it is getting disturbed.
Okay. See, the reason is the order I'm having in another system. That is the reason. Original order, I'm keeping it in the separate system. I don't want to shift the thing. That is the reason. Okay. See, in the case of self-generated items, we generally don't bring it to the books. Unless it is a software where it is developed for a company purpose itself, we don't make out the recognize this particular thing. But intangible assets generally comes when you acquire a company. So in the case of acquisition, we pay for the consolidated assets and liabilities as a going concern, and we allot some values for this particular scenario. Where the intangible assets are acquired, generally it finds a place in the books of accounts. But in the case of intangible assets which are self-generating, it is not generally brought into the books. The question now comes in AS 26 whether we have to recognize this particular items also. See, particularly if you take to the case of newspaper industry, see the mastheads, though it may not have a big value, but it has an important factor. Similarly, in the case of company which is dealing with this direct marketing services, if you look at it, the customer list, the data relating to the customer list, meal list, so many things are all available. Is this to be brought into the books? Is a question which the management as well as the company auditor has to take into account. Unless we spend some money on this particular thing for acquisition, generally it is not brought into the books. So keeping this particular scenario, this question has to be answered. Now, what is a proper records? See, in the case of proper records, generally you will find it doesn't have a physical existence, so it cannot be verified. Physically, it cannot be verified. If at all it can be verified, it can be verified by means of certain documents connected to this particular thing, license copies. Software, if it is in the seedings available, we can test it whether something is available on that particular. So this proper thing, the auditor has to take into account so many issues while replying to this particular aspect. The next aspect is with regard to the title deeds.
Please check the audio, sir. It is sometimes getting disturbed. It is very low sometimes. Sometimes it is high. It is.
Madam?
Audio is not clear, sir. Your audio is not clear, and so many members are requesting for that to check once.
Okay. Now I'll try to make
sir, sometimes it is very low.
Oh, something very low. Okay. Madam, I'll try to speak a little bit louder so that at least easier. Now the next is with regard to the title deeds of immovable property. This class was there in 2016 also. The only things what they have made in this particular scenario is they have added one bracket aspect which they said is, but excludes the properties which the company has taken as lessee. This is a basic thing which has given, which is different from 2016 Act. Probably this could have come for a specific reason when companies are adopting Ind AS 116. So they calculate the lease rentals payable for the entire lease period, discount and account it as an asset as well as a liability. So probably because of that, any changes in this immovable, even the rental operating lease will take it, it is not bringing into our books account. So they want to give this clear exclusion for this particular purpose. In addition to this particular thing, what they wanted us to find out is whether the title deeds are held either in the name of the employee or in the name of the director or relative of the director. What is the position held, for how much period it is being held, right? What is the reason for not transferring the same to the company's thing? So these 5 points we may have to make it out very clearly. So possibly one or two reasons, justifiable reasons for not transferring into the name of the company could be whenever these companies are acquired which is having immovable properties, there is a stamp duty to be paid for retransferring to the new company.
I'm very sorry to disturb you, sir. The voice is very disturbing. Sir, can you please, any other program is running in your computer? Can you please
no, madam.
Switch off that?
No,
otherwise, if you have any two connections, internet connections, use only one, sir.
Delete. No, I don't think there is any connection running in this. file, madam.
Can you please log off once and log in again?
I'll come. I'll do it. I will do it. Okay.
Okay.
Log off.
Actually, when you are answering the question, okay, the voice is clear. But when you are taking the session only, our voice is not audible. I think the situation, the speaker is not put in the proper place, the receiver.
Once
you log off and log in again, sir.
Yeah, log off.
That is also not required, sir. The speaker is not properly put in the proper place.
It's in a laptop, madam. That's the reason.
Okay.
Hello.
Sir.
Now it is okay, madam?
Now it is okay, sir.
Okay. Any certain technological problems which you may have to face it.
Okay. Yes, sir.
Maybe, sir.
Okay. Now, what are all the items that has to be included coming part of the definition of immovable property? Immovable property is not defined under the Companies Act, but General Classes Act defines immovable property as it includes land, benefits arising out of land, things attached to the earth or permanently fastened to anything attached to the earth. All the things form part of immovable property. Now, investment property as defined in India is 40. Normal NACA standards does not contain a standard for investment property, whereas India contains this particular thing. India talks about this investment property as any property which has been specifically used for giving it for rent. It is not used for the purpose of our business. It is given separately. In addition about it, if the property is given for the purpose of generating revenue as a separate stream, then they require to be treated as an investment property. Now, that particular thing also we may have to include it for the purpose of reporting. Normally, it is included in PPE only, we treat it as a land and buildings. But investment property requires to be disclosed separately. And in those cases also, we have to make it. There are certain assets, non-current assets held for sale as defined in Ind AS 105. Now, Ind AS 105 requires us to, wherever current assets which are held for sale, which are not being used, which are held for disposal. Now we have to remove it as part of our fixed asset schedule and show it separately. If those assets also contain immovable property, then reporting has to be done for this particular thing also. Remove it. Remove it close by it. Okay. Okay. The next aspect comes with regard to the revaluation of assets. Now, the question reads like this: where the company has revalued its property, plant, and equipment, including right assets or intangible assets, or both during the year, and if so, whether the revaluation is based on the valuation by a registered valuer, specified amount of change, if any, that is 10% or more in the aggregate of net carrying value of each class of property, plant, and equipment. Now, in the case of revaluation, the question is very simple, whether revaluation is done during the year or not. It is only applicable in the year of revaluation, but it is not applicable. This reporting is not to be done for subsequent years. If the revaluation, whether it is done by the approved revaluer or a registered valuer, the whole idea behind this particular thing is the authenticity of the document, the subject matter and other things. They wanted to have it done whether it is a registered valuer. The third aspect is if the change is more than 10% of the class of the asset, 10% or more of the net carrying value of each class of these assets, then it requires to be reported upon. So this revaluation is applicable not only for tangible assets, but also for intangible assets also. Now the question comes in this particular thing is the reporting standard on PPE allows us to do both on the cost model as well as on fair value model. If it is a cost model, the question of revaluation generally does not arise. Whereas in the case of accounting is done at the fair value model, now at each balance sheet date, the assets are required to be valued. Any increase or decrease is to be accounted for in the manner specified in the accounting standard. Now, now there is one more thing which you have to keep it in mind, including right of use of assets. They have made out this particular thing. What exactly is right of use of assets? Does it represents 116 valuation, the accounting of lease rentals under 116 PVAs, or does it not require this particular thing? Fortunately, the guidance note has specified the following items does not come within this particular clause. Valuation PP upon the first time adoption of NDAs. See, when you do the adoption of NDAs for the first time, the option is available to carry net carrying value of the existing assets, or the valuation done of that particular item can be treated as the gross value, and for India's purposes, they can do the depreciation of things on the carried value. In those cases where the valuation is done for this particular thing, then this reporting is not required. Next aspect with regard to the remeasurement aspects. See, where the assets, valued assets are increased due to Section 43A of the Income Tax Act. They ask you to increase the value of the assets, the increase or decrease in the exchange rate value, or accounting standard and foreign exchange valuation. If the value of the assets are increased, then reporting for those items is not required to be done. Changes to ROU assets due to lease modification as per Ind AS 116. Now, Ind AS 116, whenever what it is, we just make it the primary lease period and also extended lease period. We take it and then discount it and account for it. In case either the lease period is further extended or we are vacating even before the extended lease period, the modification has to be done as per the Ind AS specified way in Ind AS 116. And the guidance note specifically says that reporting of CARO for this particular purpose, we need not do on this particular thing. The next aspect is with regard to the item is where any proceedings have been initiated or pending against the company for holding any binomy property under the Binomy Transaction Prohibitions Act 1988 and rules made thereunder, if so the company has appropriately disclosed details in the financial statements. Okay. Now, here we may have to slightly diverse from the CARO and then looking into it why there is a change in. So CARO has been brought out in 2020 itself. Unfortunately, in the Companies Act, in the scheduled balance sheet, Schedule 3, certain amendments were not made to enable the proper reporting by the auditors. So in view of this particular thing, the CARA reporting has been postponed by 1 more year. That is from 2020, March 2021 to March 2022. During that period, certain amendments have been made in Schedule 3 to ensure that the company discloses various aspects which are to be reported upon under CARA. So that is the reason there is a delay in reporting this particular. And one particular aspect is this Binomy Transaction Prohibition Act. Now, in this particular thing, the auditor's duty is very simple. Whether any proceedings have been initiated during the year or any proceedings is pending for holding any binomy assets. This is a simple scenario. We can discuss with the management whether any proceedings have been initiated. If the answer is, report this particular thing. If any notice have come under the Binomy Prohibition Transaction Act for the company, then the company has to disclose the same in the financial statements, and also the auditor has to report on this particular thing. Now, the only way where the auditor can do some documentation for his audit file is he has to make inquiries with the management and document the inquiries. So I would only suggest the auditors to do this particular thing. Whenever there is a thing is, please send a separate mail, separate letter for various points in CARO and take a separate replies for each and every point. The management representation, we can take it up, but unfortunately, management representation, there will be about 40 points. At times, we may miss the attention, but for CARO reporting, we may have to keep a separate documentation and ensure that our discussion, to whom we have discussed, what we have discussed, what is the replies they are given, all those things has to be made part of our audit file. So, as far as the Binomy Transaction Prohibition Act is one thing, the only thing what we have to do is we have to inquire and reporting whether any notice is there or any proceeding is there, this particular thing. One doubt now we have to come into this particular thing is this reporting on Binomy transactions comes under fixed assets under the CARO. Does that mean only immobile property and movable property, or does it include any other thing? I think I leave that particular point for members to ponder upon and then come to a conclusion. Now, coming to the inventories. Inventories, what we have made is this 2000 coverage and procedure of verification of verification inventories by the management, whether it is appropriate or reasonable. This was there in the 2003 order. It was deleted in 2016 order and again brought back in 2020 order. The reason for this particular purpose, why it is reintroduced, I think it's not very clear. But the other aspect, whether the physical verification has been done by the management, whether the discrepancies is taken care of, whether it is discrepancies are reported properly taken care of, this part is already being done as part of our audit of inventories. So the coverage and procedure of verification by the management is appropriate or not, we may have to document it. We may have to take up what type of written procedures given by the management to the verification team. That also we keep as part of our audit file that will ensure this particular thing. Now, additional disclosure in this particular discrepancy of 10% or more in the aggregate of each class of inventory to be reported and then whether they have been properly dealt in the books. Now, where the discrepancy is more than 10% or more in aggregate for each class of inventory. Now, what is each class of inventory? Something a new term. The accounting standard 2 on inventories under the NAPA standards requires us to group the inventories as raw materials, trading materials, work in progress, stores and loose tools, finished goods. Whereas in the case of India's requirement, it should be merchandise, production supplies, materials, work in progress, finished goods, like that. Now, in wherever it is grouped, so if the inventory, if the discrepancy in respect of merchandise, items grouped in merchandise, in that particular class, if the difference is more than 10% of the value, then we may have to report that particular thing in the CARA reporting. And Also whether it has been properly dealt with in the books of accounts. The issue now comes is, we are reporting CARO at the year end. Physical verification is also done at the year end. There are some companies which are doing physical verification on a quarterly basis or on a half-yearly basis, or in some cases doing on a perpetual basis. Now, should you have to look to only for year-end verification for reporting purpose, or should you have to do for the periodic verification? Whenever the physical verification is done, you have to check whether the disturbance is more than 10% or not. You have to report this particular thing. The Institute guidance note specifically says it is not relating to the year-end inventory. Wherever the physical verification is done, we may have to do this particular thing, the test of 10% or more, and then report in this particular thing. It is easy to tell, but difficult to practice, because what is the benefit of saying that suppose there is a 10% value difference is there when it did the physical verification in June and it has been dealt with. This aspect also we may have to keep it in mind, but be that as it may, today, whenever there's a physical verification is done as part of audit file, we may have to keep the differences and how it is adjusted. All the things we might have to keep it in our audit file. Now, this is another new point which has been added. Whether during any point of the year, company has been sanctioned working capital limits in excess of 5 crores in aggregate from banks or financial institutions on the basis of security of current assets. Whether quarterly results or statements filed by the company with such banks or financial institutions are in agreement with the books of accounts. Now, similar amendment to Schedule 3 does not specify the limit. Whereas in the case of Schedule 3, where the company has availed sanctioned limits on the basis of the security of current assets, any documents are written, submitted, or is it as per the books of accounts? If not, the reconciliation has to be disclosed in the financial statements. Whereas in the case of the CARO reporting, it takes only more than 500 lakhs at any point of time. So where the security has been, where the loan has been taken on the basis of security, sanction limit is more than 500 lakhs. Now in CARO reporting, we have to do this particular. As part of audit procedure now, we may have to get the copy of the sanction facilities for our audit file as part of our documentation. Similarly, copy of the returns documents submitted and submitted to the banks, we may have to verify it. And if possible, we may have to note it down as part of our audit file, what is the thing submitted, how it is submitted, all those things. And whether it is in agreement with the books, if not, we have to do this particular scenario, the reporting purposes. The problem is, the issue is, some of these, the technology banks is asking to submit the documents in online mode. The company also submits documents like stock statements, ML statements, CS documents, all the things on online mode. In the bank website, they download it, fill up the forms, and then submit it. It's not possible to download that statement at present. Some of the banks, it is not possible. Now, when we do go for the audit, at the time of audit, we say that we are all submitted to the banks. But is it possible to take a copy of this particular thing? Answer is, it is not possible. This is being faced in our audit itself for a corporate thing. At least what we do, the company with the moving to the digital mode, the company doesn't prepare a copies, get it signed, and then upload it. They just prepare the document in Excel, upload it this particular scenario. Now, all those things will have a bearing in reporting on this particular document, particular reporting. It is easy to report, but at the same time, there are certain factors. In case there is a difference is going to come between the return submitted at a later date, the auditor has to document clearly, exhibit from his document saying that he has done his reporting aspect properly based on the various work done by him and exhibit in the case of a documentation. Now, sanction facility over 5 crores, but utilization is less than 5 crores. Whether it is been reported, answer is yes. That talks only about the 5 crores sanctioning limit, but not the utilization. Assuming the sanction facility is less than 5 crores, but utilization exceeds 5 crores, could be because of the interest charges, reporting charges, the balance is additional interest, penal interest, so many things gets added. The utilization exceeds 5 crores. Then reporting is not required to be done because it talks only about sanctions. Facility should include both fund-based and non-fund-based facilities. Now, it covers only cases where facilities have been sanctioned on the basis of current assets. Now, suppose the company has also given as a security immovable properties in addition to current assets. How is it possible to bifurcate this particular thing for reporting purpose? Or we have to say that since current assets is also included in addition to non-current assets, then we may have to report this particular thing. The banks can even sanction loans on the basis of security of other companies. I don't have the current assets. Now I offer the security of my associate company. Now, when the sanction has been given, not on the basis of my current asset, but on the current assets of some other company, should we have to report this particular thing, or can we say it is not possible to report it? Unfortunately, the guidance note specifically requires us to tell guidance note para 8.9.7.8 of guidance note of schedule 3 requires disclosure. Even if the current assets belongs to other companies, very difficult to comply. Schedule 3 does not require the limit, whereas CARO requires you to have 5 crores limit. So this is the thing which you have to keep it in mind as a new part. Now coming to clause 3, this is the with regard to the loans, securities, guarantees given by the company. Roughly around 7 points are being dealt with in this particular scenario. It may take some extra time. Please bear, I will try to take up the theme. Now, clause 3.3 covers transactions during the year only. Now, the point talks about whether the company during the year has provided loans or provided advances in the nature of loans, stood guarantee, or provided security or any other security. If the answer is yes, where the company has provided during the year. If the company has not provided during the year, can we say this clause? We can totally say not applicable. The answer is yes for some of the subclauses, whereas for some other subclauses it is not possible to say. But let us discuss this case. Now, it covers transactions during the year only. It covers both secured and unsecured loans, guarantees, securities providing thing. Granting of loans or advances in the nature of loans also covers, because the guidance note has given you about 4 paragraphs in all the cases how the advances are to be treated as advances in the nature of loans. Then making investments or providing any guarantee or security to all the parties. Now, the Companies Act also, the schedule 3 also requires the company to prepare a complete schedule for entire loan portfolio, entire investment loan portfolio in a separate manner. Keeping in line with this particular thing, it requires us to prepare, it requires us to cover all these things. For 2 classes, some exception is given. This exception is this 2 clauses is not applicable for the company which is having giving loans as a principal place of business. For these things, 2 clauses is not applicable. Now, if the clause 3 is yes, now what they are required primarily is one aspect. They wanted to disclose in the same fashion amount of loans amount of loans, etc. Those three categories to subsidiaries, joint ventures, associates, one total figure. Other than these loans, another figure. So first bifurcation is this particular scenario. So they wanted to know what is the loans, securities, guarantees given for these group companies and other than group companies. Next, 3B. The thing comes is whether they are prejudicial to the interest of the company. It is not relating to loan. It is relating to loan, relating to investment, relating to providing security, providing guarantee. In all the cases, are they prejudicial to the interest of the company? Now, what can be treated as a prejudicial to the interest of the company? It is more of a, what do you call it? It's a personal judgmental factor rather than an arithmetical factor, where in this particular thing, it is to be treated as a prejudicial, whereas in other thing. But broad guidance, if you look at it, where the loan has been borrowed, I have borrowed funds at a particular rate, but I'm giving loan at a lesser rate of interest. Similarly, I'm borrowing at a short term and granting it for a medium to long term. Making investments in a long-term loss-making entity, which has proven to be a failure. Then, in all these three cases, now the auditor can come to a conclusion saying that it is a prejudicial to the interest of the company, but he cannot come just like that particular. He has to make a discussion with the management, put his points, take the complete documentation, the views of the management also, keeping that particular, he has to come into the picture. Now, where the loan has been given, as part of loans are given to all the employees, and one of the employees, a relative of a director, is also covered. So can you say that I have given the loan to a director's son or a relative director? Can we make it? So if it satisfies all of the policy, general policy of the company, where everybody has a chance to get the consideration of interest, giving a consideration of interest loan to a relative of a company, relative of a director, is not to be treated as a prejudicial interest. Now, coming to class 3B, the prejudicial interest, we may have to look at the compliance of the provisions of section 183, 186, particularly with regard to the approvals. Where approvals has not been taken as required under the Companies Act, then you can come to the conclusion that it is not as per the you can even come to the conclusion it's not prejudicial interest of the company, specifically bring out this fact in our audit report. But one point which I would like to emphasize is, unless we have a complete discussion with the management on this particular point, on a clear-cut documentation in our file, at a later date, it will be very difficult for us to substantiate our reporting. The main threat is going to be the company itself will be going to argue saying that how did you say it is prejudicial to the interest of the company? So that problem we may have to face it. Now, the next aspect with regard to the loan portfolio is repayment terms. Now, when you have the repayment terms, there are two things. One, there is no repayment terms at all. There is no rate of interest at all. Second thing is, repayment terms are there, terms and conditions are there, terms and conditions are not prejudicial. If the repayment terms at all is not there at all, then we may have to report this particular. The reporting is whether there is a stipulation for the repayment schedule and rate of interest. Whether repayment of loans or payment of interest is regular, if not, report the same. On two aspects we may have to report it, whether existence of repayment schedule or rate of interest, and when it is there, whether the repayment of loans or payment of interest is regular. Now, in this, if you look into it, this covers not only the loans granted during the year, even the loans which are there outstanding at the beginning of the year, namely 31st March 2021 or 1/4/2021 also, we may have to look into this particular aspect, analyze this prejudicial to the interest or regularity or existence of repayment schedules, etc. We may have to keep a documentation in our file. Issue, the more problematic issue is going to be only in the case of advances in the nature of loans. There may not be any repayment schedule at all. There may not be any repayment terms at all. No interest, nothing is there. Still, the company management will argue, no, it is only an advance. It is not in the nature of loan. So here one tricky aspect which all of us has to keep it in mind. Now, wherever needy companies or NBFCs is there, we may have to make it out the directives issued by the RBI for Libya companies also has to be, NBFCs also be compliant. Specific reporting is a must where there is no stipulation of repayment of principal or interest, particularly in all cases, especially in the case of advances in the nature of loans. See, in the presentation, some of the aspects I have marked in red, which indicate that our attention should be more on those particular aspects. The next aspect is whether repayment is regular. The answer will be yes or no. If the repayment is not regular, there is an overview position. Now, we are asked to report on this particular thing, whether there any amount which is overdue, both principal and interest. If the loan is regularly paid, this clause may not be applicable. If the regular is not paid, it becomes overdue and we will take both principal and interest. What is overdue? Overdue means on a due date, if 31st March is a due date, up to 31st March it is not due. It is due on 31st March, and if it is not paid on 31st March, it will become overdue on 1st April. Here we have to keep it in mind, just because it is not paid within the next 1 day, should we have to report it. The auditor has to take his judgmental factor and take into consideration, there could be possibility, it could be banking holidays, or it could be various issues. If it is paid within the next 1 or 2 days, we may not take the serious issue and then report it as the overdue amount. But if it is not paid for a considerable period, we may have to make for this particular. Now, if the overdue is there, and if overdue is more than 90 days, then we may have to disclose the amount of overdue also, both with regard to the principal, both with regard to the interest.
Subramanian sir, if I may please interrupt you.
Yeah.
Participants are facing a little bit difficulty in your voice, sir. Maybe okay. You are having this earphones attached to the computer, sir. If you may please remove them and go with the straight voice, will it be okay? We will check, sir.
No,
now it's clear. Now it's clear, I think, sir.
Audible now?
Now it's okay, sir.
Now it's okay. Now I try to continue. Extremely sorry for some of the members who could not follow me. Extremely sorry because of the technical problem. I am also not do anything this one. Okay, I'll try to make out a little bit louder. Okay. If the overdue is more than 90 days, then we may have to report it. Probably the 90 days aspect, probably the government has brought it from the prudential norms applicable for the banks. That could be the reason what I feel. Now, overdue position, if the amount is overdue, what is the steps taken by the management to recover the same? So that aspect also the government wants us, the reporting wants us to make out this particular. Now, what steps the management has taken, what we can do is we can check the mails, correspondence, legal notices issued to determine it. Again, it is a judgmental factor. Now, we may have to document in our file what are all the documents which you have seen. How did you arrive to this conclusion, whether it is not what you call it, sufficient steps have been taken and other things. This is always going to be at a future date subject to interpretation. Documents which we are having in our file. So the auditor has to obtain sufficient appropriate audit evidence to support the fact that reasonable steps have been taken and should form part of the audit documentation. One suggestion we would like to make of this particular, whenever you take any of these aspects, please send a letter to the persons in governance as part of the audit standard. One audit standard, wherever we find certain deficiencies, we may have to report it to the people in governance and take their replies. It is better to take the replies in writing and keep it in our file. It could be even mail correspondence, but ensure that the mail comes from the official mail of the respective person, not from his personal mail or any other thing. Now, improper extension. See, this one particular clause, generally it happens in banks, where the banks have given the loans, they give further loans to regularize old loans, to upgrade the NPA status. I don't know why this has been brought to the other companies other than wherever the non-banking companies or manufacturing companies. I'm not very clear, but be it as it may, what is the thing is, where any loans, AINL is advances in the nature of loans are due during the year. If the loans are due during the year, whether it has been repaid or whether it is extended or whether it is renewed, we may have to make a documentation. If it is not renewed, whether fresh loans have been given to the same parties to settle the overdues. So that also we may have to look into it. Now, if these three aspects have been found out to be the aspect, now we may have to report what is the aggregate amount of each of the above cases to be reported under this class. We have to make it plus percentage of the above in the aggregation of loans or ANL outstanding to be given. This is the first reporting. Second thing, whether this in this reporting, the guidance note is specifically saying that as part of even occurring after the balance sheet date, up to the date of audit report, we may have to give. That is the thing which they are saying this particular. It is not only the balance sheet date, but also up to the date of the audit report, we may have to give it, which means some reporting figures which you are given will be covered in the next year audit report also. So this factor we have to keep it in mind. Now, this class 3F, unspecified loans. Now, this is the term used by me. It is not, the unspecified loans is not given in the CARE report. I just made out this particular thing to explain this. Where the company has granted any loans which are repayable on demand or without any specified repayment term. In one class, whether the company has got a repayment term is there, if it is not there, it will fall into this particular category. It should be checked whether the outstanding during the beginning of the year also, even for the opening loans also, we may have to check this particular thing. Classify the total of the loans into related parties, promoters and others. So where the loans have been granted without term, without repayment or granted on demand, we may have to bifurcate it to relate loan to related parties, promoters and others and totally others. Now we have to give a specified amount disclosure under the company's the CARO, aggregate amount of such loans and percentage of loans to the total loan. Similarly, specify the aggregate of loans granted to the promoters to the related parties. This particular factor probably to give more transparency into the loan portfolio with the companies, they may have to made out this particular thing. Now, only thing is what you do is we have to obtain from the promoters details of list of promoters related parties required both for the AS 18. Only thing which I would like to ensure is get the related parties for the whole year. Don't take the related parties at the end of the year only. Check whether all the related parties are covered into subclass 76 of the company side. In the Excel sheet, I have documented who are all the parties covered under this particular thing. Check whether the same covers AS 18. Review the loan agreements and documents to identify which are covered under this particular part. This is the documentation part we may have to look into. Now, the next aspect is compliance of section 185, 186. Now, 188 talks with regard to loan to directors. 186 talks relating to investment limits, granting of securities, loan to different group companies. Under the Companies Act, loan to directors in the case of private limited companies is totally covered as an exemption by means of a notification. But in the case of unlisted public companies and listed companies, we have this particular scenario. Because the time is running short, I have to rush a little bit. Okay. Loans or guarantees providing security to director, the holding company, partner, relative, all those things is covered in this particular. If special resolution is passed with full explanatory statement, then loans guarantees can be given to a person in which directors are interested. So 185 subclass 2 specifically mentions this particular thing. Now, who is a person in which director is interested? Private company in which such director is interested or member, body corporate in which 25% or more of the voting power exists, body corporate who are accustomed to act on the directors of the lending company. See, all those things are all covered under the Act itself. We can have a look to that particular thing. Now, what is exempted under Section 185? Loan to employee, managing director or full-time director or loans provided as per the scheme approved by the members in special resolution is not covered under Section 185. It is an exemption to 85. 185, we need not cover that loans here. Loan to company in the ordinary course of business provides loans, guarantees, and interest is charged not less than interest on government security norms. So interest on government security norms relating to 1 year in the government bonds, 2 year in government bonds, 3 year government bonds, 5 year government bonds, they are given. Those interests, if they are charging, then we need not, it complies with the coming within the exemption section 185 and we need not report. Now, it says exemption is loans, guarantees, persons providing securities from holding company to wholly owned subsidiaries exempt. Giving of security, guarantees and personal securities, guaranteeing and providing security from holding company to bank for any loan to its subsidiary company is exempt. So this particular categories we may have to take it up and then as loan portfolio documentation for the CARA purposes we may have to do it. Now coming to 186. 186 talks about the loan to any person or body corporate, security, providing security, etc. Acquiring shares. Investment in shares. Now, up to 60% of the paid up share capital and free reserves plus share premium or sum of free reserves and share premium, whichever this particular thing, it is covered under the general exemption. That means if it is within that limits, complying section 186 is there. If it is not, if it goes beyond this particular thing, we may have to take as previous approval this special resolution. In those cases, special resolution is not taken. You may have to say this particular thing, special resolution is not taken and it is not in line with the 186 provision. Here, person does not include the employee, but if the loan has been given to a third party other than an employee, then also it will cover. Okay. Now, what is the disclosure is loans, guarantees, provision securities in excess of the basic limit should be disclosed in the financial statement for the purpose of utility. This part is part of section 186, which even though it is not there in schedule 3, this has to be complied with and we may have to ensure while doing the audit. If it is not done, it is not in terms of section and we may have to bring out in an audit report. There are certain categories which are acting as a share brokers and which they have to require with the SEBI. Those people also, intercorporate loans and public deposits in excess of prescribed limit is violation of 186. We may have to take it up. Now 186 talks also another thing. You cannot invest in shares more than 2 layers. Suppose if the company has invested in any company more than 2 layers, that is one subsidiary, and that subsidiary will have another subsidiary. If it is having beyond the third subsidiary level is there, then the investment is not coming to that, but as per 186, it's a very rare case, but we may have to look into it and then report that one also. Now, statutory dues. There is no change in statutory dues reporting except the GST. In case of GST, we have one peculiar problem where wrongful or excess utilization, ITC utilization, and non-reversal of ITC by Rule 37, 39, 42, 43. Rule 37 talks about where payment is not made within 180 days. Rule 42 talks where where the ITC has been used for both taxable and non-taxable supplies, where the fixed assets have been used, ITC on fixed assets have been taken, which are used for both taxable and non-taxable supplies. You may have to reverse, a proportionate reversal is to be made. If such reversal is not done, the liability, output of liability is not the correct figure. The liability will be there, and if it exceeds 6 months, then we may have to bring out this particular thing as part of a statutory dues. The rest of the statutory dues, I think it is not much change. Separate guidance is there in the guidance note. Next aspect is income surrendered for taxation for assessment. Generally, in such cases, where the companies are searched, they find either cash or certain investments which is not brought into the books. If those items, generally the company may offer for taxation purposes. If such items have been surrendered, during the assessment proceedings, either by way of submissions or agreeing. Now we may have to report this particular thing and also ensure whether it has been brought into the books. It's very difficult. It is easy to report, but easy to tell, but very difficult to make it out. Now, all the assessments which are happening during the year of audit up to the date of our signing, we may have to go through. Whatever the submissions which the management has given to the taxation authorities, we may have to look into it to ensure whether had they agreed for this particular scenario. Now, keeping those things in our documentation, we may have to report on this particular thing. Thank God. We have to thank our stars. They have not included indirect taxation. If they have brought out the indirect taxation, now the indirect taxation is availing ITC on the basis of bogus bills and other things will be a big situation. Thank God they are not brought into the thing. What are all the things we have to do? Check whether the same has been brought into the books also. We have to take a representation separately for this particular thing. Now, this has an impact on SCA 315, identifying and assessing the risk of material misstatement through understanding the entity and the environment. So anything once you have noticed this particular thing, we may have to follow this SCA 315 and do additional procedures, additional risk mitigating factors, audit aspects we may have to do this particular thing. The next aspect is with regard to the willful defaulter. Now, willful defaulter, the company itself has to say that whether it has been made as a willful defaulter, either by the bank or financial institutions or by any other party. If the company already reports it, then there's no problem. We can refer it and make it. The problem is going to come only when the company does not report it, but still it is taken as a willful defaulter. Then how the auditor has to make out this particular. Now, we can get a signed declaration from the company saying that they are not declared as a willful defaulter or they have not received any notice. If they have not received it, we can make out this particular. The only problem now is going to be, it is possible for us to verify the civil report of the company. Of course, it is a payment process. What I was told is, if you want to obtain the report of the company, you have to pay some money for civil reporting. If you download the report and ensure that whether the company's name is there as a willful defaulter. As additional audit procedure, we are all taking the confirmation from banks or financial institutions for the year-end loans. At that point of itself, let us add another line saying that please confirm whether the company has been declared as a willful defaulter. Let us take a specific writing or specific confirmation from the bank or financial institutions on this particular aspect. So that will be an additional factor to additional documentation factor for us to reporting this. Now the problem is going to be there, SCA 560. If the reporting is done, declaration of willful defaulter subsequent to the year-end date, but before the date of audit report, we may have to report this particular thing also. Now, utilization of term loans. Now, this utilization was term loans raised for the purpose. It is an old class which was removed but reinstated. The auditor should obtain sufficient appropriate audit evidence with regard to utilization of the loans raised. It covers the old loans also. We may have to do a review of terms and conditions for the purpose of term loans raised should form part of the audit file. I'm just rushing. I'm sorry, I have to rush this particular because the time is running. Now, with regard to the fraud, the only aspect, additional audit reporting, what we have to do in this particular thing is, in the case of audit, in the case of frauds, where under section 143, where the fraud it is a higher level, the auditor has to file a report with the central government. If such reporting has been done by the auditor on noticing of the fraud beyond a certain magnitude, when he files this particular thing, then you have to bring it in this particular factor. Okay. Now, this is the additional reporting with regard to the frauds. Now, in the case of frauds, one aspect, 2 or 3 factors, how do we know that it could be a fraud factor could be there? company has surrendered loans, surrendered income for taxation purposes, which is not recorded. Something is going on. Where the documentation submitted to the banks or financial institutions, which is not mapping with the books records. It's not very small sum. I'm not talking about a very small thing. The deviation is very high. Now, it is a fraud done by the company itself. Another dangerous aspect in this present CARO 20 with regard to the fraud aspect is 16 Act talks about fraud on the company by the employees. But by the employees, the CARO 2020 has removed. So if the fraud has been done not by the employees, even by the third parties, then auditor has to look into that particular aspect. The next aspect is funds taken from entities for meeting obligations of related parties. Suppose I have taken a loan from institutions for making investments in my subsidiary company, or making the loan obligations my subsidiary companies or group companies or joint ventures, then I have to take up this particular thing. Now, the entity will include everything: banks, financial institutions, NBFC, LLP, trust, etc., etc. Irrespective, it also includes from private parties. I have taken a loan from private party and given the loan for the purpose of meeting the obligations of my subsidiaries or group companies, then I have to make out this particular thing. Now, here the question is loan taken in the earlier year, back end of the last year, but utilized during this particular year for this particular purpose, I also have to make it out. Now, what that auditor can find it out? The cash flow statement, if you do a careful analysis of the cash flow statement, this will help us to write to some extent on this particular aspect. Next aspect, loan taken on the pledge of securities of subsidiaries and joint ventures and associate enterprises. It's a new reporting. Covers even loan taken and repaid during the year itself. I have taken a loan on the basis of pledge of securities and repaid it during the, even then we have to cover it. Loan taken from any lender is covered. It is not a bank or financial institution. Now, under 1956 Act, if you look to section 125(4), any loan taken on the pledge of movable property is not a charge need not be created. But under the section 77 of the Companies Act, now the pledge, that particular exemption is not there. So even if the pledge is there, we have to make it out. Now the question comes, it is only securities. Now, how is it possible for the auditor to find out whether the pledge has been made or not? Now, let us take the DP statement from the company. If you, the DP statement, which you get it, will have a clause whether the shares have been pledged or not. Even if it is pledged and pledge has been removed, this data is available. Now, as part of investment audit, we may have to take the DP statement of the company, and for reporting purposes, we may have to ensure this particular thing is there. In addition to this particular thing, the auditor, the CARO report says, is there any repayment of default and repayment of such loans? Repayment of loans generally is there, loans taken, but specific things we may have to make out for this particular thing also. Fraud, I think I have covered. Now, these two aspects will help us to find out whether any fraud has been made out. I will not say whether the fraud is done by the company, but an indicator, the auditor to look a little bit more and make a separate discussion with auditing on fraud aspects. Whistleblower, I think as well as whistleblower is concerned, the Schedule 3 itself requires whether the company has made all the whistleblower complaints in time. Other thing is there. Now, the same thing we may have to look into it and understand this particular thing. As part of, in the case of listed companies, whistleblower committee is there. Minutes of the whistleblower committee can be looked into. But in the case of unlisted and private companies, now we may have to take a declaration from the management saying that even in the case of where the committee is there, we may have to take a declaration that all complaints which has been brought into the whistleblower committee has been brought to the notice of the auditor and steps taken is there, is mitigated. Should obtain a representation of the management that all complaints received have been shown to the auditors and they have been properly dealt with. So we may have to take that particular separate representation for this particular thing. Nidhi company, the reporting is there. Default and repayment of interest on deposits is the additional thing in addition to what is there in the 2016 Act. Now we have, I understand in the tomorrow or after tomorrow, a specific session has been given for Nidhi companies, probably it could be dealt with in a data length in that particular, by a particular professional who is taking on Nidhi company. Internal audit. This is a old class reintroduced. Now, for all the companies covered for internal audit, this is available in the Excel sheet also. I have given this particularly for positive time. I'm skipping it. Now, should report whether the commensurate with the internal audit system with the size and nature of business based on the size of department, qualification of persons who undertake the internal audit experience, working with people's experience, professional training, all those things. Now, the problem in this internal audit reporting comes on two factors. Now, in some large companies, internal audit is not done for the financial year of reporting. So they take a different year. So from July to June, whereas audit is done for, reporting is done for April to March for financial purposes. Now, in that case, what we are given the audit, you are certified the accounts and given the report, they are doing it at a later date and finding what is not covered. And some portion is not being covered at all for our purposes, for reporting purpose. In that particular thing, the auditor should use his professional judgment and understanding. We have to come into that particular. Now, should include in the audit documentation how assessment of internal audit system is made. Now, as part of our audit documentation, if our internal audit function is there, we have to be clearly what is the basis on which we have to do this particular thing. It should be properly documented. The question comes where the company is not required to have an internal audit at all, how to report and what impact it has. Now, if you say that the company is not required to have the internal audit system at all, the next question is, as part of our audit, during the audit, we might have relied on the work done by third parties. Or if the internal audit, the same thing, even the company is not required to have the internal audit. But if you say the company is having a sufficient internal controls, this reporting was given in 2003 reporting guidance note, where even if the internal audit is not there, the auditor can report on a specific factor, which may have to take a call and then do this particular scenario. You should call for and review all the internal audit reports and submit it. It has to be done. Now, one problem with the internal audit is the internal auditors give the draft report. Company gives a reply. Based on this reply, they drop some of these points and then give the final report, which contains only every aspect. Yes, everything is controlled, everything is there, everything control is there, everything is satisfied. Can we take that report? But for documentation, our review purposes, we may have to take the draft report and what are the replies. This is my sincere way I would like to do it for our SCA 610 request using of the internal audit is mandatory for statutory auditors. Quite possibly internal audit is not complete or reports given is not furnished to the auditors. Auditor should obtain copy of all the including draft reports and management explanation to them. Otherwise, will not have a proper documentation. Cash losses. This is the same thing was there in 2013 Act. So sorry, 2003 Act, which was brought down in 2020 Act. It is not much difficulties there. Only problem, what is the cash loss under the new provisions? Cash loss to be computed as net profit before taxes plus depreciation plus provision for impairment loss, provision to be made for Ind AS 116 and Ind AS 38. Clear workings should be kept forming part of our audit file. Resignation for the auditor. Suppose if the auditor has resigned, now 883 is to be filed. The company also should be given a copy of the 883. The incoming auditor should call for the same and review the same for reporting under this clause. Ideal would be the same to call for the same before accepting the appointment. Now, if you are going to accept, if you accepted the appointment and subsequently you call for the reason, if the reasons given are valid and certain things where you will not be able to accept the appointment, then we'll be running into the problem. Okay. So it's better to take the review of this data reason for resigned by the earlier auditor even before the acceptance of this particular. It is to be noted that resigning on flimsy grounds like personal reasons, not possible to devote adequate time, medical grounds, all those things is not permissible now. See, no person is going to resign for this particular thing. Maybe there are 1 or 2 cases, a real genuine reason could be there. But in most of the cases, it could be the difference of opinion, which we may have to keep it in track and then make out this particular thing. Commenting on the going concern. Now, this clause says that based on the financial ratios, based on the recoverability of the loans, based on the ability of the company to repay the loans within the next 1 year, whether the company's existence can be made. In short, it is a going concern reporting. This is highly judgmental reporting. If you say that you have a concern whether the company will continue, the company itself will come and say that it will be against you. Detailed documentation should be made along with discussions with the management and responses received on this issue and kept in our audit file. Generally, we will find only it's a double-edged weapon, but this particular clause is a triple-edged weapon, and it will act against the auditors, if not this year itself, even in subsequent year also. So we have to be very, very careful. Any adverse conclusion in this account would require comment on the main audit report itself, because in the case of going concern issue is that if you are not satisfied, the company can run for the next 12 months at least. Now, either it should be brought out as a separate paragraph in the main audit report, or in some cases, you may have to give the adverse opinion itself, because some member has asked the earlier speaker and the earlier speaker said it will be dealt with by the myself. Now, what is the clauses not covered? Matters which are retained as part of CARO itself, 2016, which is not changed, I have not made out. Relating to CSR activities, I have not covered. So CSR activities, somebody was saying that the one question with regard to the earlier speaker was, if the company has not complied with the provisions of CSR, the issue is now the CSR liability we may have to provide for in the books of accounts. After providing, whether the utilization has to be brought into it, if unspent balance is there, it has to be, I think there is a requirement that unspent balances we have to transfer to the government account. If those activities is not done, a sufficient reporting has to be done. Now, it is a CSR activity, it's a compliance reporting by the Companies Act itself. If any provision that the company is not complied with, then it should find part in the auditor's report. Compliance with other laws and things is different, but compliance of company report itself is one aspect. So next is CARO requirement on consolidated financial statements. The CARO is not to be reported for consolidation reporting, except where there are qualification is there, name of the company and respective clauses. The main consolidated, the auditor citing the consolidated report in his report has to say that these are all the companies, these are all the clauses in which adverse report is there in this particular scenario. Any questions I am willing to take. I am extremely happy and thankful to the Vijayawada branch. As usual, they are calling me to talk on various aspects periodically. I thank the management of the Vijayawada branch, particularly because it gives me an opportunity to read the book again and again, at least for making me to prepare for this particular scenario. Thank you, one and all. If there's any questions, we don't mind taking them.
Yes, sir. In chat box, we have some questions. I request the participants to please post your questions once again, so that it will be easy for us to pick it up.
Yeah.
Sir, one question from Nitin, sir. He says that he asked that company does not have any activity for the last 5 years, but management says it will continue activity very soon. So what is the going concern implication here? He's asking, sir.
That particular matter is basically a detrimental factor, madam. I'll tell you it's a detrimental factor. Now, whether the auditor is satisfied with the explanation given by the management, that is one aspect. If the auditor is satisfied without any doubt, then he did not say that the company does not have any activities, even then it is likely to continue, you can make it out. Suppose if there's a disagreement by the auditor, now he has to bring out that fact in his audit report, though he need not say that the going concern is not there, but he can bring out this factor based on the even though the issues for going concern concept is not satisfied, but still the management is of the view they are likely to start the operations within a particular period, they can do it. But only problem will come is, suppose the management says, I'll do it in the next year. Next year also the company has done anything. If they come with the same explanation, then the auditor cannot take up this particular scenario unless he got a sufficient documentation. Okay.
Yes. Sir, a few participants have raised their hands. We'll go with Anand.
I think I got some of these things. I'll just go through this particular one by one. And can you make it out, madam?
Definitely, definitely.
Is there any website to track notices issued by the Binomy Transactions Prohibition Act? Binomy Transaction Prohibition Act itself is very latest scenario, but to my knowledge, there is nothing like this particular thing, because the authorized officer is the Commissioner of Income Tax in the respective range. Probably, to my knowledge, there is no any website to track the notices. We have to rely only on the company's stand. Then audit quality or audio not clear. Okay. Simply difficult to understand. Okay.
Sir, but once you have removed the headphones, the audio was clear, sir.
Madam, I'm extremely sorry for this particular thing. Kindly repeat the cases where CARO reporting is not required. CARO reporting, madam, I'm sharing one Excel file which you might share it to them, where it is specifically said where the CARO reporting is not required. Now, CARO reporting is not required. I'll take it in two things. One, CARO particular clause is not at all applicable. Can we simply say without mentioning this particular thing? Or should we have to say this particular clause is not applicable? As a part of control the audit process itself, as an audit reporting process itself, let us make all the clauses wherever specific reporting is required. Let us make a report, and then let us check what are all the clauses which are reported. Total clauses is 45 clauses is there. Now in the last clause, we say these clauses are not applicable in our view, and hence it is not reported, so that the completeness will be there. So we need not say that particular clause, fixed assets, it is not applicable. Let us not make. If it is applicable clauses, let us list it down, and clauses which is not applicable, let us at the end, the last paragraph, you may have to make out this particular thing. Now, how will you define AINL? AINL is advances in the nature of loans. As I mentioned, guidance note has covered more than about 4 or 5 paragraphs on this particular thing, how to identify this particular thing. Payment of medical expenses. I'm sorry. Okay.
Sir, I understand, sir.
Yeah.
We will take one question from the participant directly.
Yeah, madam.
Anand, sir.
Yeah.
Sir, one aspect.
This is Anand, sir.
Sir, before you make it, I'll just make it. See, I keep this particular thing as part of this putting whatever the queries which is raised. I'll make a reply and send it across to Vijayawada branch, which you can share this particular thing.
Yes, sir. Yes, sir. Definitely. Definitely.
Yeah.
Yeah, Anandji, go on.
Yeah, this is with regard to payment of medical expenses to on behalf of the director, pending settlement of insurance claim shown as a current asset. Any requirements, sir, to report?
Sir, I'll take this in 2 ways. One, if the company is a director, is an employee director.
Employee director.
If it is an employee director, see, reimbursement of medical expenses you would have covered as part of the resolution for appointing this particular director.
The company is not interested to reimburse. They're just showing it as current asset because it is refundable from the insurance.
No, I'm just giving you this particular thing. See, if it is part of the appointment letter itself, the company undertakes to reimburse the medical expenses. Subsequently, they claim it back. In that case, it is not there. There is no problem in this particular. But if it is paid to a director who is not in the employment.
Okay.
We had a case in Chennai. There, the company has paid the club bills of the directors. They are not on the employment rolls. So it covers under management remuneration limit.
Managerial remuneration, 198.
So if you covered in the management remuneration limits, if the permission is not taken, then we may have to report it is a violation of the Companies Act. What we can say in this particular, the payment has been made, which requires to be ratified in the subsequent general meeting. If the ratification is done, there is no issue. Just because the fact that you get a reimbursement, it does not matter if the requirement is not there as per the Companies Act, the appointment itself, the non-employee directors, then it is not possible to make the payment. It will be violation of Companies Act.
Will it become advance to the director? Because it is a...
No, see, if it becomes advance to the director, then he has to refund it.
Yeah, that is what. See,
Yeah.
the reporting
You may have to mention it in the audit report.
Yeah, that's what. Reporting period, end of the reporting period, it is not settled.
It has to be mentioned.
Okay, fine. Fine, sir. Thank you.
Sir, one more question we have.
Yes, sir.
Whether with reference to section 185, full-time director employee, will he also be considered a definition of employee?
No, can you repeat it, sir?
With reference to section 185,
okay,
full-time director employee will also be covered under definition of employee.
Yes, there should not be any problem. See, that is the reason when housing loans and other things are all given to the full-time directors, if it is based on the complete policy and everything, it is given as an exemption.
Yeah, I make a pardon, that is not section 185, but it is section 186.
Yeah.
Yes.
It is part of the same. If the employee loans, it is not covered. Probably that is the reason.
Okay, sir.
Sir, at the end, let me thank the Vijayawada branch again for giving me this opportunity. And I don't know whether I can download this particular messages. If it is not possible, these queries, if you can share it with me by means of a mail, I'll prepare a reply and send it across to you, sir.
Sir, chat box can be downloaded by us, sir. From our account, from admin account, we can download the chat messages. We will forward it to you, sir, for your reference.
Yeah, we'll do that particularly. Anyway, thanks once again, and also all the members of your Vijayawada branch for a patient hearing. Unfortunately, because of the technical problems, my voice and everything, there was a problem. I request you to bear with me on this particular. Thank you.
Yeah, our chairperson, madam, has identified the issue and called me and asked me to check. So fortunately, we were out of that disturbance for some time. Okay. So thank you very much, sir.
Thank you very much.
Your experience was on display for the last 1.5 hours. You were referring to 2003, 2013. What was there in 3, brought in again in 16, or left out, or brought in again in 2020. So that experience will definitely count, and it will be very much useful for all of us, sir. Thank you very much. And also, we look forward.
I'm also feeling sorry one aspect because I have to rush in some of the slides because of the time factor. I think you should have made it as a 2-hour program. Then we could have discussed a little bit more front and then made out this particular scenario for the members. Anyway,
nonetheless, it was very much comprehensive, sir. We are more than happy of what we have heard from you. Fine, sir. Before we sign off, let me give you a programming note of tomorrow's session. Tomorrow's session will also start at 5 p.m. and the topic will be understanding deferred tax liability, including AS22, as well as cash flow statement and MAT computation. The session speaker will be CA GN Ramaswamy, and we will also be joined by Chairperson and Vice Chairperson of the Corporate Laws and Corporate Governance Committee. First, we will listen to them, and thereafter we will listen to the speaker. For now, good night. We will sign off and see you tomorrow at 5 p.m. Thank you, one and all.